is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week live on radio, TV, YouTube, and Bloomberg Originals. Yes, TGIF, we made it. It is Friday, January 24th.
Yeah, we haven't made it yet.
We're getting close.
Just gonna throw that out there.
We're getting close. Watching the equity trade, and we are pretty much at our lows of the session. We just took another leg down, so we're going to get into it. We should point out, though, the world's biggest stock market, we are talking about the United States, headed, though, for its best start for a new U.S. president since Ronald Reagan was sworn in back in 1985. So we're going to talk about the trade in just a moment.
Yeah, the S&P 500 up about 2.7% so far this week. More on that in just a minute. Though it could be the battle of the century, Carol. President Trump on interest rates versus Fed Chair Jay Powell. Reminder, he did appoint the Fed Chair during his first term.
They might just take it to the mat. What do you think?
I don't see mild-mannered Jay Powell doing that.
All right, probably
He's just like
not.
head down and working. That's what he does.
That sounds about right. All right, plus we're going to get into shares of Novo Nordisk, out with a development, and that has sent the stock soaring in today's session, so we'll give you the lowdown on that.
All right, you're going to read this next one because you're the French expert.
All right, ooh, pressure. Also, Meta's mega beaucoup bucks spend on AI. Did I say it right, Mike?
Hey, you said it right. Yeah.
Okay.
As close as you're going to get if you're not in France.
Mega beaucoup bucks spend. Let's just say they're spending a lot when it comes to AI. We're going to get into that. We're also going to get into the small start. This is easier to say, to President Trump's big AI goals.
And Wall Street enters.
You passed that to me.
I absolutely. You wrote it. You get to read it. Wall
That's
Street
fair.
enters the darker age with most stock trading now hidden. We're going to explain what's going on with these dark pools in just a few minutes.
Mega beaucoup bucks
All right,
spend.
I trust you.
All right, and then we're going to get into, we're going to talk about that. A lot coming up in the next 60 minutes. Folks, can you tell it's Friday? It's Friday. All right, let's get to the trade. What's going on? Someone much more together than we are is Charlie.
All right, I thank you very much, and here's what's going on. We've got the Dow, the S&P, NASDAQ, all declining, and a beaucoup loss right now for the NASDAQ Composite Index, down 0.6%. We have got the S&P, to put it all in context, down 22 for the S&P. That is a drop of 0.3%. Dow Industrials down 145, a decline right now of 0.3%. 10-year 4.62%, the 2-year 4.27%. Should point out that the S&P on track for a weekly gain. We've got the price of gold higher by 0.6%, 27.72 for the precious metal. Crude now up 0.2%, 74.79 a barrel, and Bitcoin up 3.2%, 106,472 for Bitcoin. Apple executive Kim Vorath, a company veteran known for fixing troubled products and bringing major projects to market, has a new job, and that is whipping AI and Siri into shape. We've got Apple shares today trading lower by about 0.6%. And just getting word that Target is rolling back its diversity, equity, and inclusion initiatives, becoming the latest company to reverse course amid pressure from President Trump and conservative activists to end such policies. Again, recapping here, equities lower, S&P down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie putting us on the straight and narrow, so we're going to keep it together here. All right, I got to say that many are still ruminating over President Trump questioning Fed Chair Jay Powell's decision-making when it comes to interest rates. He said he planned to speak to the central bank chief at the right time. Here's the quote that I guess we've all been thinking a little bit about. This was from Donald Trump. He said in apparent reference to Powell, I think I know interest rates much better than they do, and I know it's certainly much better than the one who's primarily in charge of making that decision. Again, there's the reference to Jay Powell. He was speaking to reporters in the Oval Office. That was late yesterday. The president went on to say, Tim, if I disagree, I will let it be known.
It's not the first time the president has openly talked about Fed policy, nor the Fed chair he appointed during his first administration. So we thought it timely to bring somebody in who knows a thing or two about the Federal Reserve. And by the way, next week's Fed meeting, the first one of 2025, is happening. Michael McKee is a Bloomberg News international economics and policy correspondent. He joins us here in the studio.
And he could say mega
Mega
Boku.
Boku.
He can. He can do that. And he is the international economics and policy correspondent, after all.
You could say it 5 times fast.
We have an ECB meeting next week too, so we can,
So hearing the president speak yesterday, Mike, did you have flashbacks to his first administration, where he was tweeting about interest rate policy?
Oh, sure. I mean, it's nothing new for Donald Trump. It's just that there's no laugh track in the Oval Office. He obviously doesn't know more about interest rates in the economy than the Fed chair or anybody on the Fed. But he does have the real estate entrepreneur's desire for low interest rates. You can understand that. And he doesn't see the contradiction between wanting to bring inflation down and also at the same time bring interest rates down. So as far as next week's meeting is concerned, I am fairly confident he's going to be disappointed in the result.
What happens, though, Mike, and maybe a little historical perspective, when a president says things about Fed policy or a Fed chair?
Well, there is one disturbing precedent, and that was in the early 1970s when Richard Nixon pressured Arthur Burns to let the economy run hot because he was running for re-election, and Burns did so, and that helped fuel the big inflation that ended up with Paul Volcker at the Fed raising interest rates to almost 20%. And no Fed person, chairman, governor, bank president, janitor wants to be associated with anything like that again. So no, the Fed is not listened to. It creates some confusion, and it's kind of important for the Fed to respond to a certain extent when he says that. Why Jay Powell said no, he would not resign, because they don't want Wall Street to start thinking do what Arthur Burns did, and then you kind of lose interest rates because markets, you'll do what the politicians do.
Okay, so there's a lot of areas I want to go here. First place I want to go, though, is to May 2026, and that's when term. We know that during the term, in hindsight, he's not happy with he appointed who his agenda or didn't necessarily his orders. He's not going to make that said this time. Who could he appoint to run the Federal Reserve who would act his wishes?
Well, that depends on what you mean by his wishes. A Fed chair come in and say and do anything they want, but they don't have the power members of the committee to do anything. And so if somebody is too far off the reservation, still legally on the board, then one assumes to the Open Market Committee, which is more what that person and do their own thing. That would be something totally new, but it would be certainly possible. There are of people on the conservative ledger, a Kevin Warsh or a Kevin Hatt, people disagree with politics, but what they're talking about. Warsh was a governor, so there are people out there that he could choose. I think significant things to think about is he chose last time, with one exception, were way on the none of them were considered by the Senate, and then he chose Waller, who was the researcher of St. Louis Fed, and he sailed to become one of the more influential people on the board. That's not a Waller is a Trump, but he is the kind of person who could be appointed who would not be an issue.
I mean, president get rid of a Fed chair?
No.
No.
No. The law says that, it's unclear whether he could demote the chair out of being the chair, but the chair is a governor, and the laws can't fire a governor except for cause, some sort of malfeasance, and there's obviously nothing malfeasant about big interest rates higher to bring down inflation.
Mike, what would happen if, for some reason, the Federal Reserve decision that market really did not agree with? What would it do? And then what would happen?
Or seem kind of political?
You mean
yeah, like they would, yeah, like make a
you would probably see
they would see the wrong move.
Yeah, what people would call the vigilantes would come back, put up a hanging rope for the bond market. See that happen? It would be hard to get something like that through the entire market committee. That would do that much damage to the bond market that the market would have to react.
It's a good reminder, though, that the Federal Reserve is in a certain extent, but the bond market
Sure.
is...
Which goes back to the Robert Rubin line, Clinton about, or Bill Clinton's line after listening to Bob Rubin, that I the bond market because they have power over everything.
One last question, 30 seconds here. We do have our first Fed meeting of 2020. I assume that this will probably be some of the Q&A about, once again, the Fed independency.
Jay Powell said, we'll say, we're just focused on doing our job. Politics doesn't enter. We're going to make the right decision, meet our mandate. He'll try to leave. I'm sure he doesn't want to get into any kind of insult contest with the president.
Right. I'm going to take it to the mat. Oh, well.
But it would have been fun. Yeah.
All right, Mike, thank you so much. Michael McKee, Bloomberg News International Economics and Policy correspondent who can say several times. I'm just going to say.
He can.
Yeah.
Drug maker can deliver the most weight loss from a next generation product.
Yeah, this little race that's going on. Hey, let's get more into why, and we have our own in-house expert on all things GLP-1 drugs. Madison Muller is Bloomberg News health reporter. She is in studio. All right, great to have you here. Happy New Year. I feel like, have we seen you?
I know, I haven't seen you in a while.
And there's stuff going on.
There's a lot going on.
All right, what's the news here for Novo?
So this brings Novo back in the race, because I think investors were a little worried there for a minute. At the end of last year, a very closely watched trial of Novo's drug CagriSema, which is a next generation weight loss shot, fell short of investors' hopes and some of actually the bar that the company had set for itself. These next generation products were looking for like 25% weight loss. Novo's drug fell short of that, and that was an issue. The shares were down at the end of the year. I think investors were concerned, and now they are delivering again with another next generation weight loss shot called amycretin, which works similarly to some of the other drugs that are already out there, and so they're back in the running.
I thought the next gen product was not a shot.
So there are shots that are delivering more weight loss with potentially less side effects, which is, I think, one of the things that Novo is going for here. And then there's also the pills. So there's like two different things going on. And then you have Amgen, which is trying to develop a shot that can be taken less frequently. So we're seeing with these next generation products sort of a divergence in what companies are going after and prioritizing.
Is it also about these drugs which initially were used to treat diabetes? Are they also looking to even make them better for treatment of diabetes? Or is this kind of all, like, am I missing something?
They are. They're testing them in diabetes as well. And so
Okay.
I think that is an interesting point that isn't brought up as much. Like a lot of, I'm not exactly sure about this drug that Novo that we're talking about today, but yeah, these next generation products are also being tested in diabetes.
Because Madison, when we talk about the market for these drugs, it's a combination of just people who want it for weight loss, right? And it's also for treatment for diabetics?
When we
or
talk
what?
about the market size, as I think the most recent estimate from Goldman Sachs is 130 billion by 2030. That's just obesity.
That's just
so
weight
that doesn't
loss.
even include diabetes. That's just weight loss, which is huge. And they've kept upping the market estimate just as these drugs have blown up.
Can I just ask you, so then when we think about that market size, when we talk about the number of diabetics in the United States, is there crisscross with the number of obese people in the United States?
There is some crisscross, yeah.
Okay.
And it's interesting when you think about insurance coverage too for these drugs, because some people, like, you can get Ozempic. If you have diabetes, you can get Ozempic pretty easily through insurance. But on the weight loss side of it, it's almost, it's extremely difficult a lot of times, and coverage is very patchy for getting covered for weight loss. So they'll cover the drugs for diabetes, but not for weight loss.
Hey, what does the Trump administration mean for these companies?
She's smiling.
That's a good
I'm throwing you a
question.
curveball here because you wrote about the Make America Healthy Again movement. There's a whole slew of folks, especially in that movement, who don't believe that this is the right way for people to lose weight. They think the intervention should be completely different. They shouldn't involve shots and pharmaceuticals, especially for kids. What are the folks you talk to, the analysts, saying about a Trump administration for these companies?
It's interesting. So we've talked about Jillian Michaels on this show before.
She was at the
she was at the MAHA Make America Healthy Again ball, and she's like sort of been brought into this circle, which is really interesting. And a lot of these MAHA people are pretty against weight loss drugs and just pharmaceutical interventions in general. They think, healthy diet, food, exercise should be prioritized first.
I mean, some people were up in arms that Larry Ellison mentioned a cancer vaccine.
Interesting. Yeah, I mean, I
saw that play out on social media.
It is, yeah, and the social media just discussion and around MAHA is everywhere. I mean, that is where a lot of this dialogue is taking place on X or Instagram. And I was at this healthcare conference last week, though, with a lot of investors and people in the industry. And there was a ton of optimism about the Trump administration from pharmaceutical companies, even, the lobbying group Pharma that represents Eli Lilly and all of these big drug makers.
Right?
It's huge, yeah. And I was asking about RFK, I was asking about Trump, and I mean, I think that there's optimism around there being, a better deal environment under Trump, but also a lot of them were saying that they think that there's more common ground with RFK than there are differences, and that they will be able, I mean, he's not confirmed yet, but will be able to work with him, and that obviously everyone at the end of the day, their goal is to make people healthier, and so they were less concerned than I thought that they would be. I was a little bit surprised, actually, by their reactions.
What about NIH research and so on and so forth, where, sometimes significant developments come out of that work that is funded by the government? How does that kind of roll into it?
To that point, Carol, there are already reports of scientists being told not to share their research outside.
Right, because there's this communication pause, which we've been trying to figure out what's going on with that. And to some degree, it's normal when a new administration comes in to sort of pause things and go through a review process, but it seems like it is sort of stymieing some of the research, and scientists are concerned that there's going to be ripple effects and that the pause may last longer, or certain things might not be allowed.
There's this tension here, though, because I saw today that the Trump administration withdrew this proposed ban on menthol cigarettes and flavored cigars. This was something that public health officials really wanted, anti-smoking groups really wanted. You have tobacco stocks higher today as a result. That doesn't sort of align with the Make America Healthy Again movement.
That was something we were talking about this morning, is there is some misalignment with, I guess, and that's something that we're curious about, right? Is at the end of the day, we don't really know what Trump is going to do when it comes to healthcare policy. And so there's a lot of guessing, and the MAHA movement obviously has been very big and very influential leading up to the election. And so sort of how that plays out now is a question mark. And we are already seeing these divisions with Elon Musk, going back to weight loss drugs, loves Ozempic. He thinks everyone should be on a cheap GLP-1. And then you have people in the RFK camp who have the opposite opinion. So there's a little bit of disagreements happening, and where these things sort of fall when it comes to policy, we don't know yet. We don't know who has more influence.
And some might say that debate might be good in terms of smarter policy, but for those who want to either invest or kind of figure out the significant trends, it's really tough. 30 seconds left here. Is it going to be another big year for GLP-1 drugs, likely?
Yes, I think the biggest thing this year is the oral drugs. Lilly's drug, orforglipron, has a big late-stage readout mid-year, and that's a huge thing that investors are watching for this year.
She would not have a problem with Boku.
I was just saying,
the way you say
drugs, that word.
We're all like, what? What? Every time there's a name in a drug story, we're like, you do it. No, you do it.
That's funny.
Well done. And it's a sector that we've been talking about so much for the last 2 years, but get ready for year number 3. Madison Muller, as I've said a million times, a must read on the Bloomberg at Bloomberg.com, and also on social when it comes to all things GLP-1.
Hey, let's take a look at what's going on with markets. We got a little over an hour and a half, down 0.4% on the S&P 500, down 0.7, Carol, on the NASDAQ composite.
Coming up, we're talking about AI, Meta's big spend on AI, and the small start to President Trump's big AI goals. It's all coming up when Business Week continues on this Friday.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ trading lower. S&P 500 index right now down 25 points at 6,093, falling below 6,100. The S&P now down by 0.4%. Dow Industrials also down 0.4%, while the NASDAQ Composite Index right now down 136. That is a drop of 0.7%. 10-year 4.62% with a 2-year that's yielding 4.26%. Gold up $17 the ounce, up 0.6%, 27.72 on the precious metal. West Texas Intermediate crude higher, little changed, up just under 0.1%, 74.68 a barrel. But a big move for Bitcoin right now, up 3.1%. Bitcoin 106,310. Again, recapping, stocks lower, S&P down 24, a drop of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are talking a lot about AI again today. Shares of Meta platforms are rallying. Few things going on I want to point out. Company's head of Instagram putting out some posts on Threads saying that it has begun testing ads there. And then before that, and here's the AI twist. Earlier this morning, CEO of Meta, Mark Zuckerberg, in a Facebook post, said that Meta plans to invest as much as $65 billion in projects related to artificial intelligence this year, including building a giant new data center and increasing hiring in AI teams. So, Tim, we know that they've been spending big, but this is even maybe a lot more than folks were anticipating.
Yeah, here to unpack it all is Bloomberg News technology reporter Kurt Wagner. Kurt, also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Kurt joining us from Denver. Kurt, I saw this news break this morning before the market opened, and my immediate thought was shares of Meta platforms are going to fall on this because investors are so concerned, I thought, about how much companies are spending on CapEx. We saw it move other companies when they've reported these figures. But no, we're seeing the opposite reaction. Why the optimism?
Yeah, I think AI is just some like magic elixir, apparently, that you can, say, hey, we're spending a ton of money. People don't love that. But as long as you throw, that money is going toward AI investments, people are a lot more on board. I do think that Meta, more than maybe most companies, already has a running start on the AI front, right? I mean, this is not like a standing from 0 to 60 kind of thing. They have chatbots in all of their apps right now. They already have smart glasses. They built, they're up to almost Llama 4, right? Their fourth version of those large language models that they've been developing for years. So I guess if people are excited about the stuff they've already seen from Meta, the idea of throwing even more money onto that fire might resonate more with investors than maybe some other companies doing it that don't have the track record Meta does.
Gotta say, Kurt, it feels like this high-stakes AI poker game because, here we are in a week where we have talked a lot about AI, and you had coming out of the White House a bunch of big tech folks there, that $100 billion joint venture that was announced called Stargate, OpenAI, SoftBank, Oracle, President Trump helping to announce that on this AI infrastructure spend, a big time. It just feels like, okay, you did $100 billion, I'm going to do this, It just seems like the timing of it is kind of interesting. And then you've got Meta reporting next week, like why didn't they do it then? So help me understand kind of what's going on and maybe why Meta did this right now.
I think the timing is certainly not coincidental. My guess is that they were planning to announce this at earnings, that they saw the other announcements you mentioned from the White House earlier this week from some of their rivals and thought, hey, this is getting a ton of attention. All these stories are being written about this huge AI investment, but we're not being mentioned. Let's go ahead and, jump the shark a little bit on our own announcement from next week to make sure we can ride this news cycle. That's my guess. They'll still be talking about it at earnings next week, of course, but you never want to let, all of your competitors have all the fun, talking about this stuff while you're sitting on, what they consider to be a massive investment as well. And so I don't think the timing, though, was coincidental at all in terms of why they did that today.
Kurt, are analysts and any analysts out there saying it could be possible Meta's overspending on AI or any of these companies are overspending on AI? Because that's a sentiment that Mark Zuckerberg actually shared with Emily Chang over the summer here on Bloomberg. So, has something shifted or is there that possibility still there?
Well, I was just about to say I'm going to do you one better. Not just an analyst who's saying maybe they're overspending, but as you point out, the CEO himself is sort of admitting, hey, we're probably overspending on this thing. Look, I mean, I think the idea here is you are willing to take the short-term loss of a couple $1 billion, even $10 billion. Maybe they don't need to spend 65, they need to spend 55, and you're willing to take that loss, knowing that you're going to get 10 years down the road and not be like, gosh, I really feel like we didn't invest enough at that time and we're now behind, right? We're behind Google or OpenAI or whoever. And so it's easy to say that, but I do think people are willing, to bet on Mark Zuckerberg. He does have a track record of success, and he can kind of get away with overspending right now because of that. And so, I very, very much agree that we could be in this maybe a little bit of a bubble here where they're overspending, but at the same time, what's the trade-off, right? Like, you don't want to get down the road and feel like you missed the boat.
Hey, Kurt, before we let you go, you got another story out talking about Meta's Threads are set to show ads for the first time here in the U.S. and Japan. To remind everyone, this is sort of the ex-Twitter competitor that emerged a couple of years ago in the wake of everything that was happening at Twitter/X. What do we know about the monetization of that platform, the popularity, the staying power of that platform?
Yeah. Well, first talk about coincidental timing, right? So they say, hey, we're about to spend $65 billion on AI, which, as you mentioned, might be a little too rich for some people. Well, then they follow that almost immediately with, but don't worry, we have this new revenue stream, that we're about to turn on with Threads. Threads, for those who aren't familiar, is the Twitter clone that Meta launched about a year and a half ago, has 300 million monthly users. And I think they're pretty well positioned, right? I mean, the advertising, this is what they do. This is what they do with Instagram and Reels and Facebook, of course. So turning it on for Threads, I don't think is necessarily this huge thing for them. It's just yet another audience for them to monetize. So we'll see how quickly they ramp up this thing. But again, I think the timing of announcing that goes hand in hand with the high spending on the infrastructure stuff, because they're trying to make sure investors know that there is a new revenue stream coming online, even as they spend heavily on AI.
Always good to look at all columns of the balance sheet. Just going to put it out there. All right. Yeah. Thank you so much. Kurt Wagner, Bloomberg News technology reporter. He's also author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. All right, we're going to stay with AI. Take you now to a small Texas city. It's about 200 miles west of Dallas, and to the first data center associated with that $100 billion Stargate venture. That is the joint venture that was announced just this past week at the White House, and it involves OpenAI, SoftBank, and Oracle. Bloomberg News enterprise reporter Brody Ford joining us now to take us to really Abilene, Texas. He's in New York, but take us to Abilene. Brody, what's going on? Or what do we know is going to go on?
Yeah, close your eyes and we're going to pretend we're going to Abilene. Essentially, there's this massive facility being built out there. The comp is New York Central Park, and that's where they are building data centers which will ultimately go ahead and power OpenAI's, AI training and inferencing and all of that kind of computationally intensive work. It's a big deal because it's the first facility we know about in this giant Stargate project, right? Tuesday morning, a lot of these tech titans showed up at the White House and presented it alongside President Trump, and it caused a lot of people to ask, how real is this exactly? Is it happening now? At least one project certainly is happening now, and again, it's in that, small west central Texas city of Abilene.
What about these types of jobs? Because as you note in the story, data centers aren't necessarily conducive to lots of people working for the entirety of their existence. What do we know about the types of employment that they provide?
Yeah, most Americans don't own a bunch of stocks, and the way that they benefit from industry is there being more high-paying jobs, and those people maybe being able to pay more to other local businesses in their community. And so when you hear a big project, you want to hear jobs. President Trump said 100,000 associated with Stargate. OpenAI took it a step further, said hundreds of thousands. In Abilene, we got our hands on some of these documents that the government had, and the minimum guarantee is 57 jobs making shy of $60,000 a year. And, to be fair, there'll be a lot of construction gigs, and they'll probably end up having more than 57 people. But the idea that, in this mega site, one of many, but still a mega site, may only have 57 full-time jobs created, that throws a little water on the idea that data centers will be a massive, employment driver for the country.
Yeah, and I do also wonder about, as these things, the build out continues, we've talked about the tremendous energy drain and energy demand and impact on communities, like how that might play into what gets built and where it gets built.
Certainly. I was speaking with a real estate reporter colleague a couple days ago, and she said that they're treating data center deals like real estate, but it's really energy plays, right? It's about where you're going to be able to get the power you need. Speaking of Elon Musk, he's developing a giant facility there in Memphis, right along the river. And there's been a lot of concerns from the community there of, do we have enough power? Will this work? All the local authorities say absolutely. The amount that he's going to pay into the system will, we're going to more than benefit. It's also a question when it comes to location of who's going to give you tax incentives, right? We saw in Abilene that the local authority there, the city, is giving an 85% tax discount, property tax for the facility. And so, when you're a global company like this, you probably kind of have your pick on some level, right? You got to find the power, and then it's a question of, all right, where can we get the best deal?
Hey, Brody, while we have you, do want to touch on another story that you wrote today. This one all about what's happening to the companies that are working with TikTok, because in one corner you've got Apple and Google, in another corner you have Oracle, and there could be serious implications for how these companies treat TikTok as the U.S. works out the fate of TikTok.
Depending on who you ask, TikTok may still be illegally operating, right? It's unclear. It's very unclear with the law right now that's active, but then President Trump said, no, there is an executive order, and if you are a technology vendor working with TikTok, you will face no liability. The biggest, most powerful companies are not on the same page here. Apple and Google, if you go to their app stores, you cannot download TikTok right now. But Oracle, they are the primary cloud vendor for TikTok. They host all the videos you see, and they manage the servers. I mean, they're making a ton of money off of TikTok, right? And so they're not really going to be keen to turn off that service unless they feel it's super necessary. And Oracle chairman Larry Ellison, we saw him at the White House on Tuesday, right? He's famously pretty close with the Trump orbit with Elon Musk. And so, word from Trump that, hey, I will make sure you face no issues if you keep doing this, I'm sure that matters a little more if you're Oracle.
Yeah, fascinating, right, in terms of how things are playing out.
This is why I've been staying off TikTok, Carol. I don't want to break the law. That's why, okay?
I thought you said you just stayed off because when you are on it, you're on it for a long time.
Yeah, I'd still be on it right now.
A little addiction there.
Yeah, that's why.
All right, Brody, thank you so much. Have a great weekend. Bloomberg News Enterprise reporter Brody Ford joining us right here in New York City. All right, folks, when we come back, we're going to get into, we'll keep tracking what the president might do or not do when it comes to trade and in particular tariffs. So we're going to get into what one global CFO has to say about that and U.S.-China tensions and decoupling from China specifically. That when Bloomberg Business Week continues on this Friday.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks take a breather. The Dow, the S&P, NASDAQ all declining right now. We have got the S&P 500 index down 23. A drop right now of 0.4%. We are on track for a winning week. On the week right now, we have got the S&P 500 index up by roughly 1.7%. The market on track for its best start to a presidential term since Ronald Reagan was sworn into power in 1985. S&P back below 6,100, 6,095 where we stand now, down 23, down 0.4%. The Dow lower by 174, drop there of 0.4, and NASDAQ down 0.6%. 10-year at 4.61%, the 2-year 4.26%. Spot gold up 0.7%, 27.74 the ounce, while West Texas Intermediate crude lower, little changed on the day, down under 0.1%, 74.55 a barrel. Bitcoin just above $106,000. Bitcoin up today by 3%. Earnings news. American Express profits increased 12% as well-heeled consumers spent more than analysts expected on their credit cards over the holidays. American Express shares down 2.6%. And Texas Instruments shares, they are down 7% after earnings. TI slumping after the chipmaker gave a disappointing earnings forecast for the current period. Again, recapping, stocks lower. S&P down 23, a drop right now of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much. Do appreciate that. Well, the euro was headed for its best week in more than a year. This as investors pared back expectations for interest rate cuts, also betting that the U.S. trade tariffs won't come into force as soon as many had previously feared. Nonetheless, companies and their C-suites are trying to game out the different scenarios.
Yeah, that's especially true for any kind of tariffs that might come out of the Trump administration. For more on that, let's get to our next guest, team of guests, I should say. Bloomberg News senior editor Nina Trentman. She's family. She's here in studio. And then we've also got with us out in Germany, the chief financial officer of EBM Pabst, Harold Kleiber. He is, by the way, featured in the Bloomberg CFO briefing newsletter that comes out on Sunday. It can be found at bloomberg.com/CFO-briefing. Welcome to both of you. Harold, I want to start with you. How are you planning or thinking about planning for trade tensions and possible tariffs from the Trump administration? What are your expectations?
Yeah, well, I think, first of all, thanks a lot for having me this afternoon. I'm pretty happy to share our thoughts on a couple of things with you. When we look at the new administration and the potential trade conflicts coming up, I think we need to step one step back, actually, because from a predominantly overall business strategy, we are running on clear local for local approach. That means that we, for a couple of years already, build up local competence, which is true for the US market as well as for the China market, just in order to have a proximity to our customers, supporting them and also being speedy and flexible with their demands. So that is the predominant reason why we are building up quite independent organizations in all the regions. And that, of course, is also now a big advantage, having a sufficient portion of local value creation, which makes us a little bit more independent from overall trade flows. And that's something which makes us a bit more relaxed. Nevertheless, of course, if we talk about trade conflicts, that is an area of concern overall.
Can you talk a little bit about the local for local strategy? Like, when did that come into play? Was it in response to Trump's first administration? And will you still see an impact if he was to impose tariffs on European goods?
Yeah. So actually, we've started with that already a couple of years back. And as I said, that has nothing to do with any administration or any kind of political. That's a pure business reason, coming from the market requirements, coming from our point of view. How can we be successful in the markets? And that needs a proximity, that needs local value creation.
Harold, I want to jump in because we have been living in, I feel like, decades of globalization, right? And that was the smart way to do things. So when was the turn? What made it make more sense to be kind of operating, producing in the market that you're selling? When did that switch happen? What was it?
in the end, it's a question of scale. Of course, you need a certain level of local business in order to establish an sizable organization. And I would say it started already almost 10 years back, I would say, with a clear local for local approach.
So where specifically are you moving operations? Because as we heard this week from President Trump, he wants stuff made in the United States. Where specifically are you making things now?
So in the U.S., we are located actually in Farmington, in Connecticut, and in Telford. So these are the two places where we have currently operations in the U.S. And yes, we are also continuously investing in these plans. We've just started a further expansion, and we are further investing in the U.S. In order to have a really sizable organization. We're also moving our R&D capacity into the markets just for speedy market answers.
Harald, we also talked about decoupling in your China business. One of the things that many companies are doing right now, thinking about whether they need to sort of separate their China entities. How far have you gone with that?
With that, we're already pretty far, actually. In China, we are running more or less, we would be able to run the operation pretty independent. We've built out a complete local supply chain. We have all necessary competences from R&D to treasury in the Chinese organization. And this is the difference. The one is the business approach, the local for local, and the decoupling is more from a risk management perspective in order just to prepare ourselves in case something happens that we could really separate. Yet, in a normal course of business, we still try to work pretty integrated in our global network. But yes, for China, we are already gone pretty far to run the operation separately.
Does that include financing as well? If you're thinking about domestic financing in China, can you talk a little bit about that?
Yes. Yes, absolutely. So we've just started a further expansion in our plant in Xi'an, in northern China, actually, and then this is where we also raised the local financing. We also have a couple of operational lines from local banks, and this is really something which we started, I would say, in the last 2 to 3 years to also get more independent or more localized on the finance side.
Harold, it's fascinating because it sounds like you're getting local financing. You're not backing off of your China exposure, right, in terms of building up your facilities there. But you mentioned risk management. This is the reason why you have decoupled from China specifically. What's the risks that you're worried about and why you did that decoupling? What specifically?
So in the end, the big question is, of course, it could be that in China, with their more kind of internal perspective and in the increasing of local independence of the whole country, actually, it might at some stage happen that inflows from outside could be pretty difficult. Or at least that imports to China would be pretty difficult. And this is why we actually said, okay, next to our operation there, we also need to make sure that from the complete enterprise architecture, they could run separately. And this is what we actually prepared from a system perspective, from a financing perspective, and so on. Just in order to prepare if flows would be highly interrupted.
Understood.
Harold, just 10 seconds left. We have some elections in Germany coming up in February. Political risk, just 10 seconds.
No risk. We rather hope that we start to decrease bureaucracy and still have kind of stable framework conditions, because in the end, stability and planability is key for business success and for trust in investments, and that is what we need in Germany.
Yeah, they've had, 2 years of shrinking output and next to no growth in recent quarters, so certainly looking for some changes there. Folks, thank you so much. Harold, thank you. Harold Kleiber, Chief Financial Officer at EBM Paps, joining us from Germany, and of course our own Nina Trentman. Thank you. Senior Editor at Bloomberg News. Be sure to check out the Bloomberg CFO Briefing newsletter. You can find it on the Bloomberg on Sunday. All right, you are listening and watching Bloomberg Business Week. We continue here. Coming up next, we get into Wall Street entering the darker age. That when we come back.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week on this Friday. Carol Masser, Tim Stenovec. Let's get to the most read story on the Bloomberg in the past 8 hours. It's about the world's largest and most liquid public equity market, where the majority of all trading in U.S. stocks takes place. Well, actually, Tim, maybe you don't know about it.
Yeah, because most of it's actually hidden. Wait. Bloomberg News finance reporter Kat Doherty here in New York. What is going on here? Is this happening after hours? Is it happening outside of the exchanges? Who's doing? I don't get this.
Help! Tell us.
So this trend has been happening over time. You've always had this dynamic where you have trading that happens on exchange. And right now, for the purposes of this conversation, let's just talk about the normal trading hours. So from open to close, you have trades that can be transacted on the New York Stock Exchange, on NASDAQ, but you also have other venues off exchange. There's many different terms for alternative trading systems. There's also firms that can internalize and process the trades themselves using their own balance sheets. And all of that trading happens in the dark. It is not being displayed as if it was transacted on the exchange themselves. But what's interesting is the trading that happens off exchange is still using the pricing that you see displayed on the exchanges. So it's all one ecosystem. They're just interacting in different ways. And so over time, what we've seen is that the percentage, the volume of equity trading that happens on exchange has actually become less and less. And for the first time ever in the last 3 months, that percentage has gone above 50% of trading has happening now off exchange, meaning it's become the majority, and that's never happened before in equity market structure history.
All right, so Kat, is this just the result of kind of like the digital world increasingly taking over and the ability to do this? And is it just a matter of time that most of this is happening off exchange and that, it's not going to be happening on exchange? And does it really matter as long as the pricing is fair and clear to everyone?
I would say that if the pricing, if we see that it stays fair and clear, there's a lot of factors that go into that. But ultimately, if the data does show that the pricing is not deteriorating, if you have investors that are still getting the best price for what they want to sell or buy a stock, then it actually doesn't matter too much, but that remains to be seen, right? That is a big question mark and what everyone is now asking. Now, to your first question, what are the factors? What is the drivers that really was the reason behind this trend that we're seeing of moving off exchange? There's two things that many experts have pointed out to me. One is the rise in retail trading overall. We've seen that from the meme stock craze during the pandemic period of time when everyone was at home and trading on their apps and on their computers and had more time to do that. That hasn't come back. We've actually seen a resurgence in retail trading in recent months. And then there's another factor that is actually somewhat tied to retail trading, which is the number of stocks that are listed at either less than $1 or less than $5. That accounts for a lot of this volume. So if you strip out the stocks that are under $5 or under $1, this trend isn't quite as strong. So those two factors together is really a huge reason behind the growing trend of off-exchange trading that you see in the data.
When it comes to these transactions, Kat, who is there a middle person that's left out? Do exchanges not like this? Do market makers not like this? Is anybody left out of the equation who wouldn't be left out if it were on exchange?
So I would say the exchanges, to talk about them as a party first, they would probably want to see more trading on their own exchanges. For one thing, that is how they make money. In the same way that if a market maker is processing a trade, they're taking a small portion of that as well. So yes, it depends on who you're talking to. There's always going to be a venue or a middleman, as you say, where these transactions need to take place because they need to cross hands at a point. And so it depends on where it is crossing. And the exchanges would argue that the less there are trades on their own venues that is in the lit markets, they call it, and that just means it's out in the open, and that price is being used to also dictate how the pricing is being set off exchange. So a lot of experts are saying now, if more trading is moving off exchange, is that going to impact the pricing and the dynamics between the two worlds, both off exchange and on exchange?
Right, which would mean ultimately somebody has the advantage, and that would likely be maybe the institutional, right, the big guys. So that's maybe something to keep an eye on. Is that true? Just got about 10 seconds.
In terms of advantage, disadvantage, I would say it all comes down to pricing. So what is the tightest price, the best price that you can get for what you're asking to either sell or buy? That is going to be the main factor moving forward to look at in the data.
All right, cool stuff. As we said, the most read story on the Bloomberg in the past 8 hours. So kudos to our Kat Doherty. She's Bloomberg News finance reporter. All right, folks, that's going to do it for our first hour of Bloomberg Business Week. For those watching on television, the close is coming your way in just a moment. Tim, we're continuing on radio.
Hey, we're going to tell you why the first buddy, yes, Elon Musk, is hanging out at one of Boeing's manufacturing facilities. We'll tell you why that is. That's coming up next on Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. While visiting Hurricane Helene victims in North Carolina, President Trump said he's considering getting rid of FEMA.
Whether it's a Democrat or Republican governor, you want to use your state to fix it and not waste time calling FEMA, and then FEMA gets here and they don't know the area. They've never been to the area.
CBS's Dave Malkoff says in some areas of North Carolina, it still looks like the hurricane hit yesterday.
People, in some cases, are taking matters into their own hands, and instead of going through and getting money from FEMA and waiting and waiting and waiting, they're going ahead and putting things together with just what they call mountain ingenuity, where they take maybe a rail car and put it over the river area, and that's a way that they can get from one side to the other.
Trump is now flying to Southern California to tour the wildfire damage. Hamas has announced it will release more hostages tomorrow. CBS's Rami Inocencio is in Tel Aviv with the details.
Hamas has released the names of 4 more Israeli hostages, which will be a huge relief, of course, to their families here in Israel after the past 15 months of captivity. They are all female soldiers, aged either 19 or 20.
In exchange, Israel will release another 200 Palestinian prisoners. President Trump's promise of mass deportations has begun with the arrests of more than 500 migrants.
Some of those arrests happened at a work site in Newark, New Jersey, where Mayor Ross Baraka was outraged.
None of these people were rapists or murderers or criminals.
Mayor Baraka says the agents did not have a warrant.
We believe that there were 3 people who they say were undocumented that they detained, but they also detained folks that were, in fact, citizens.
Amy Torres with the New Jersey Alliance for Immigrant Justice is upset, but not surprised.
We knew that it was going to happen. This is one of those bitter, I told you so moments.
Linda Kenyon, CBS News, Washington.
Vice President J.D. Vance addressed anti-abortion protesters at today's March for Life rally in Washington, D.C.
And it is the task of our government to make it easier for young moms and dads to afford to have kids, to bring them into the world, and to welcome them as the blessings that we know they are here at the March for Life.
The Senate votes tonight on the nomination of Pete Hegseth for Defense Secretary. Republicans say they have the votes to confirm him. The National Association of Realtors says sales of existing homes fell to a 30-year low last year. CBS News business analyst Jill Schlesinger explains why.
High prices combined with high mortgage rates combined with ever-increasing homeowner insurance policy rates makes buying a home right now very difficult.
Prices were up last year. This is CBS News.
people love.
An injury forced Novak Djokovic out of the semifinals at the Australian Open.
Djokovic retired with a leg issue after losing the first set to Alexander Zverev on ESPN, and the crowd was not sympathetic.
I can't believe some people are booing. That's bogus. And yeah, there's some people are booing and Novak's putting the thumbs up. That's just horrendous.
Djokovic had a run-in earlier in the tournament with an on-court interviewer. An American Danielle Collins seemed to encourage boos when she defeated an Australian player. Steve Kathan, CBS News.
The Deep South isn't the only area to get a record winter storm this week. A storm battering Northern Ireland and Scotland today is packing damaging winds. County Galway had a wind gust of 114 miles per hour, the highest ever recorded in Ireland. 1 million customers have lost power. All public transport across Ireland has been suspended. Hundreds of flights have been canceled. Michael Wallace, CBS News.
When you're hiring, have you ever felt like you're missing out on meeting great candidates? It seems.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are back on Bloomberg Business Week. 55 minutes to go to wrap up the trading day and the trading week. We've got stocks bouncing around their lows. We'll get an update on the trade in just a moment. Carol Masser, Tim Stenovec. One of the things we're going to talk a lot about is Boeing this hour.
Yeah, shares of Boeing are lower today. About something that happened yesterday. We're going to get into that, but also we're going to talk a little bit about why First Buddy Elon Musk is hanging out at Boeing's facilities. After all, they're rivals when it comes to the space stuff, Carol. It's the subject of today's Big Take.
It's a great deep dive, and it's a fascinating read. Also, speaking of the President Trump's attack on illegal DEI, disorienting corporate America. Quite a reversal in this first week of Donald Trump in the White House, not just for government workers, but really maybe a rethink across the corporate landscape. We're going to get into what exactly is going on.
And it's a bird, it's a plane, it's a bottle of wine. No, it's actually none of those things. It's a box, it's a can, it's a keg, and yes, it's wine.
Nicely done.
Thank you. I just came up with that.
Well done.
Thank you.
Well done, well done. We're going to get into, we're going to talk a little bit of wine. It's Friday, everybody. We've got the founder and CEO of Nomadic Wines joining us. We might do a little bit of sampling.
I think so. I think we have some of the cans.
I think we do.
Okay.
Yes.
All that
Producer
and more
says
coming
yes.
up
Thumbs
over
up.
the next 2 hours. First up, though, checking the day's traded top business stories. Here he is, Charlie
All right,
Pellet.
thank you very much. And here we move into the final hour of trading, and we have got the Dow, the S&P, NASDAQ, all declining. S&P, by the way, on track for a winning week, but right now very much in the red, down 23, drop there of 0.4%. Dow Industrials down 163, a decline of 0.4. NASDAQ, the composite index, down 126, down 0.6, while the NASDAQ 100 index, full of big tech names, down 0.7%. Broad-based selling today with the Russell 2000 index of small cap shares. It is slumping now by 0.3%. 10-year 4.62%, with the 2-year 4.27%. Gold up $19 the ounce, $27.73, up by about 0.7%. West Texas Intermediate crude, we'll call that unchanged on the day, $74.63 a barrel, but a big move today for Bitcoin. Right now up 2.5% at 105,659 on Bitcoin. Novo Nordisk up the most since August 2023 after its experimental shot delivered as much as 22% weight loss in an early stage trial. Novo Nordisk up 8.3%, rival Eli Lilly up by 2.1%. Briefly, Spirit Airlines is updating its passenger dress code with new restrictions on lewdness, building on efforts by the discount carrier to shake off its image as a downscale brand. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Shares of Boeing are lower today. This after a surprise announcement late yesterday, reporting preliminary fourth quarter revenue that missed consensus estimates. Shares down about 1.3% as we speak. Boeing did say that last year's strike affected results. It noted charges, Carol, for certain defense, space, and security programs, as well as costs related to previously announced job cuts.
Gotta say, Gotta say, helps if I put it on my mic, but it highlights really what has become a long road back and really a long road ahead, if you will, for the company's CEO, Kelly Ortberg. He is really trying to stabilize the U.S. aircraft manufacturer, and on that very long road, we know all the things that have been coming at Boeing the last few years. He is likely to run into Elon Musk along the way. He did last month, by the way, when the first buddy swooped into a Boeing facility to inspect the new version of Air Force One. Again, it's our second wait what moment on today's edition of Bloomberg Business Week.
Well, that particular part of the Boeing story is the focus of today's Big Take, written by a team that includes Julie Johnson, Bloomberg News senior aerospace reporter. She joins us from our Los Angeles bureau. Julie, the story, we wanted to have you on because you've got the big take, but also we got this surprise announcement late yesterday from Boeing. First, share with us what we learned from Boeing yesterday and how the challenges that they reported, why the shares are down today, and how it's related to Air Force One and some of the other programs that you discuss in the big take.
Oh, man, that's a big ask. Let's just start with yesterday. And Boeing under Ortberg, now for the second quarter, we've seen them pre-announce bad news. So I think maybe he wants to get the bad news out of the way to sort of clear the decks for the earnings discussion next Tuesday. And hopefully we'll hear more about his plans, to try and pull Boeing out of the slump this year and the progress they've made since the strike. So that's how I would look at the news. I think some of the charges were a little worse than the market had expected, and revenue was way down. So I think that's probably why there's a little bit of trade-off today. And maybe there's, I'm definitely not a stock picker, I'm just guessing here. But maybe it reinforces just what Carol had said. The company does have a lot of work to do going forward.
Well, let's talk about that, Julie. So maybe Kelly Ortberg, the CEO of Boeing, can maybe check in with Elon the next time he's in town. Remind us, your story is just a great read, and I know it's you and the team, but tell us about this first, I guess, I don't even know if it's the first visit, but this recent visit that Elon made to Boeing.
I think it's the first, and forgive me, I'm going to go on an aside here, but something that is helpful context, I think. Just remember that Trump is an av geek. Trump is a plane guy.
Yeah.
And huge enthusiast of the Boeing 757. His Trump Force One is a 757 that he bought from Paul Allen. He's not a fan of the 737, by the way, but he loves the 747 as well. And he began, his first few months after the election in 2016 by publicly challenging Boeing on the new Air Force One, tweeting that, that $4 billion is too much, cancel a contract. And that opened the door to Boeing's CEO at the time and the lobbying team to go in before any of their rivals and start to establish this relationship with Trump and his inner circle. So anyway, the planes that Trump negotiated and for the new Air Force One, he was personally involved in that deal. We could, whether it was a great deal or not, that's a topic for another time. Anyway, the project's not gone well. And the planes that were supposed to, first plane was supposed to be in service last year. Mm-hmm. Who knows when it will come, but possibly not until very late, when Trump is in office. Boeing and the Air Force are working through that right now. Ortberg reached out to Trump, I'm told, a few, in the aftermath of the election, as many CEOs did, to, get the conversation going. And as the largest U.S. exporter, Boeing's definitely got an interest that meshes in many ways with Trump's agenda, and also, there's some conflict as well. And this was also an opening for Boeing just to lay out, here's what we've faced with these jets. This is why they're not ready. And from what I've heard, the response was pretty measured, and it was along the lines of, tell us what we can do to help accelerate. And within weeks, Elon is dropping in on San Antonio on behalf of the president. And he was there for a couple of hours. We tracked aircraft movements into and out of Kelly Air Force Base, where Boeing's got this huge facility. And actually, with a source, I was able to pinpoint that the two planes were parked in adjacent bays for, the afternoon of December 18. And then they left within an hour and a half of each other. And Ortberg has a home in West Palm. So the Boeing jet went back there. And Trump and Musk also flew to West Palm, and I don't know, maybe Mar-a-Lago,
maybe,
or SpaceX. I don't know.
But like you said, he also has a house there.
Yeah.
Okay, so the question that I have is, what is taking this new version of Air Force One so long to manufacture? You know, in the piece that the president might not even be in this plane by the end of this term.
Oh, it's just been, Murphy's Law sort of writ large. Anything that could have gone wrong on this program has. And I think the first challenge started with retrofitting two already built planes, which the Pentagon got for a bargain because Boeing was trying to find a new buyer for them. But rather than, using the assembly process to bring in your, the anti-missile systems, the elevator, like all this bespoke hardware that's got to be crammed onto this jet. So the retrofitting, which means they've got to take the plane pretty much down to its studs to get, the pieces together. It's not gone well. And it's just been a series of things from there.
Listen, Julie, right? We all know if you've ever done a redo like in an old house, it's a nightmare. Building from the ground up, much, much easier, no doubt about it. We've only got about a minute and a half left here, and this is such a great deep dive. Highly recommend folks check it out on the Bloomberg at Bloomberg.com. But in the end, Julie, is there kind of a takeaway of what the Boeing CEO is facing? There's, the company that he's trying to turn around. It's so important, many would argue, to U.S. aerospace and defense. And yet you've got a Trump administration that can be, a fan and also provide some obstacles. Got about a minute or so. Is there a takeaway for what the CEO is facing and what he needs to do?
Well, first of all, this is the first look, I think, at a detailed look at how American business is going to, have to cope with this new administration and all the wild cards. And it's quite different from Trump 1.0. So that's one fascinating facet to this. The other is that this is seriously a make or break year for Boeing and for Ortberg. The company can't go back to the markets again for another bailout. They're done. So they've got to make the money that they raised last year, $24 billion, but they've got to make that last and through the point where their factories are healthy again. Ortberg is an engineer's engineer, a real, stickler for operations and for detail. And, Alan Mulally talks to him regularly.
Good point.
So he's doing many of the right things, but my God, what that's stress enough. And then you've just got this crazy new landscape in Washington to deal with as well. I mean, it's just really going to be a test of the guy.
Hope he either knows how to do yoga or meditation or some boxing on the weekend, because, man, you got to get that stuff out of your system. That's a full plate. Julie Johnson, killer story. So glad you could spend some time with us on this Friday. She is senior aerospace reporter at Bloomberg News out there, Tim, in our LA bureau.
Up next, Trump's attack on illegal DEI disorients corporate America. That's next. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading lower, and not just a down Friday, but just about the worst level of the day now on the S&P 500 index. 39 minutes to go ahead of the closing bell, with the S&P right now down 25, trading below 6,100, 6,092 where we stand now on the S&P. That is a drop of just about 0.4%. Dow Industrials also down 0.4%, down 189. The Nasdaq Composite Index down 135, down 0.7%. The 10-year yield 4.62%, the 2-year 4.26%. Gold up $19 the ounce, $27.74, up 0.7%. West Texas Intermediate crude 74.72 a barrel. WTI now up by 0.1%. We are looking at a busy week ahead for earnings, specifically tech. Among the names reporting next week: Apple, Meta Platforms, Microsoft, and Tesla. And Barry is managing partner and founder of Threadneedle Ventures. And she says she will be looking for what these companies have to say about the outlook. Again, Apple shares right now, they're trading down 0.4%. News involving Apple today. Apple executive Kim Vorath, a company veteran known for fixing troubled products and bringing major projects to market, has a new job, and that is whipping AI and Siri into shape. A Meta Platform CEO, Mark Zuckerberg, says his company will be investing between $60 and $65 billion in capital expenditures relating to AI in 2025. Meta right now up 1.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, everybody. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Broker Studio. As you know, it's been a very, very busy week for President Trump. A lot of executive actions coming down. And this week, the president signed a flurry of executive orders against illegal diversity, equity, and inclusion policies. And they have left corporations and their lawyers struggling to grasp exactly what it all means. The president on Tuesday ordered federal contractors to affirm that they don't, quote, engage in illegal discrimination, including illegal DEI. He also directed government agencies to draw up a list of publicly traded corporations, large nonprofits, and others in the private sector for potential investigations into compliance violations. Well, Simone Foxman has been following it all. She's Bloomberg News Equality team reporter, and she joins us here in our Bloomberg Interactive Broker Studio. Simone, good to have you here. It's been a busy week of news coming out of the White House and President Trump in particular. You and Jeff Green and Emily Flitter, you put out a story. You note that the order lacked some specifics, so that's made it really tough for corporate America. Let's go back. What did we exactly get from President Trump? What exactly does it denote?
Well, we've gotten a couple different orders that relate to equality-related issues, and two specifically that relate to DEI. In the beginning, we got an order essentially that really had to do with the government, but companies, corporate executives, and nonprofit leaders, business leaders of all sorts, were really looking for how exactly Trump would handle private sector. Now, private sector, Trump can tell the private sector to do what it wants, but the only way he really has teeth to be able to force them to change policy is by federal contractors. Mm-hmm. Federal contractors include some of the country's largest companies.
There's a lot of them out there, right?
Yeah, exactly. Because they bid for service contracts. Bank of America, Amazon.
We just talked about Boeing.
Yeah. Lockheed Martin. And they employ tons of different people. So if you are a federal contractor, you have to, in your contracts with the government, agree to certain things. This has been a tool that the government has long used in order to change diversity policies. Mm-hmm. Going back to JFK, Lyndon B. Johnson, this was how they called on companies to make hiring more equitable for women and minorities, but also, people, veterans, people with disabilities, et cetera. Now, however, Trump, in one swoop of a pen, essentially undid Lyndon B. Johnson's rule from 1965, talking about taking affirmative action to create equal opportunities for minorities and women, and then also really tasked the government with going after companies and large organizations that it thinks may be violating some rules about illegal DEI.
Well, what is illegal DEI? Like, as I was reading it again, I'm like, what exactly is illegal DEI? DEI.
Well, that's the issue here, right?
Yeah.
It's worth noting that employers have not been able to hire or fire people based on characteristics like race, like their religion, like their gender for quite a long time, because those are parts of the Civil Rights Act. So most companies have spent a lot of time thinking about how to make sure that their programs comply with laws, even when they say want to expand the number of Black people in their workforce. Especially have done that a lot, has spent a lot more time thinking about that since June 2023, when we saw the Supreme Court overrule affirmative action in college admissions. That didn't have to do with companies, but companies said, hey, we got to think about, make sure we're compliant with the legal thinking behind that. So now we have no definition of what the Trump administration really believes is different about illegal DEI than had been before. We just know they're anti-DEI, and now agencies have to go out and draw up a list of up to 9 large organizations that they believe potentially in violation of that with their DEI policies. It's a big head scratcher, and that's frankly the impact that both critics and supporters of this order think, it's a chilling effect.
One of the things that we always talk about for companies, it's when there isn't a clear way forward, right? They may not like an answer, but at least they understand kind of what the rules are. And it sounds like there's a lot of confusion. I'm assuming, or what did you guys hear from the corporate community or those folks that you got in touch with about reaching out to lawyers, the legal community? What are you hearing? Are they getting tons of phone calls to say, I'm not quite sure what this means?
Absolutely off the hook. And when we were reporting this story, we spoke to plenty of lawyers who were like, we're still digesting this. We're not really sure what this means, in part because the agreements that some of these companies have had for violations in the past, the government found they were discriminating against Hispanic workers, say. So some of the remediations to that involve plans to hire more Hispanic workers. A lot of those plans are under question now because of the way that this executive order was written, especially
so
for
companies
federal
actually putting things on hold?
They're allowed a certain time frame to kind of figure things out, but I think everyone's trying to figure things out. And I think it's worth just impressing upon you that companies don't believe they're in violation of the law with their DEI programs as they've existed. When someone tells them that this piece or another might now trigger some kind of legal action, they change it. But as yet, there's nothing really in here that says, well, this part of DEI, we now consider this more illegal than it was 2 days ago.
Because this is what I'm thinking. What if a company just says, it's so funny because we have spent years, even decades perhaps, or at least a decade, talking about McKinsey studies and other studies that's saying diversity at a company, diversity on a board is actually good for a company. It's good for the bottom line. It's good financially. It just makes sense. I can't tell you how many venture capitalists we have come on and say when you ignore, a Black population, a Spanish population, a female population, LGBTQ, you're ignoring a part of a market that, let's be who the Bloomberg audience is, a market that you can make money off of. So it's kind of interesting. So if a company chooses to be diverse, might they be breaking a law under what we're hearing?
It's really unclear at this point. The thing is, I say DEI policies are not defined in here. It's really a very different DEI policies are very different from institution to institution.
Yeah.
And in many places, things that are just good governance, good cultural things have been brought under the aegis of DEI in the last couple of years as this has become a thing and as companies have really, pushed a DEI department, have maybe appointed someone to oversee these programs. So things like broader mentorship within a firm that might be open to everybody will now live under a DEI department, as may recruiting efforts from disadvantaged communities of all sorts.
One thing I want to ask you, and this is something that I know you and Jeff and the team have really reported on big time here at Bloomberg, is that it feels like, coming off of the murder of George Floyd, We talked a lot about racism in America and equality once again, and I felt like DEI, inclusive efforts, were really ramped up. But I do feel like in the last year and a half or so, we increasingly are seeing employers let go of maybe their head of DEI efforts, even before Donald Trump was back in the White House. And we've seen this rollback on DEI initiatives. We've seen it, I feel like, every week or two or for a while. You've had JP Morgan, Goldman CEO, they're maybe resisting some of the calls to roll back, but I do feel like you are seeing companies pull back maybe on their ESG efforts. Like there just feels like there's a change in the mood.
Change in momentum of vibe shift completely, and a vibe shift that's shifted even within the last 72 hours. To your point, just earlier this afternoon, Target said it would roll back its DEI initiatives, said it would conclude a 3-year DEI goals, not set them publicly going forward again, conclude the Racial Equity Action and Change, a 5-year initiative about bolstering Black employees' career development. I mean, I think the question is now, how many executives come out and say, actually, DEI or something like that, or inclusion and belonging programs, those have been good for business because they allow us to retain talent, and that's really valuable. They allow us to see new market opportunities. And how many more companies do you say, okay, we're actually going to eliminate that department entirely, say goodbye to these number of employees? I think it's a little unclear. We just haven't seen that many people follow the lead of JP Morgan's Jamie Dimon, David Solomon at Goldman Sachs. Chuck Robbins had also, at Cisco, had also defended his programs at Davos. It's really unclear to me exactly how the division comes.
So, how do you guys think about it in terms of reporting? I guess it's kind of a little bit of a wait and see, because I thought what was interesting in your story today, your story and Jeff and Emily's story, is that there is some thinking about Donald Trump in the White House. Some would say, this is part of what he does, kind of upends everybody, a little bit of confusion, and then the dust settles. So I just do wonder if some folks are thinking that's the same thing for DEI initiatives.
Absolutely. And I think a big question now is, will this stuff still be called DEI in 6 months? Because if the way of keeping programs to retain employees simply becomes not having them live under the aegis of DEI, then that seems like an easy one for corporate America. It seems very easy to rebrand.
We just don't call it that, right?
Just don't call it that.
And I do feel like we're hearing that from consultants who say, listen, we're not necessarily anticipating from the companies that we work with that they're going to stop these efforts.
Yeah, but you do really wonder how many companies and how many corporate executives really stand up there and say, this is where I put my foot down. This is what I'm going to defend, even if you sue me, even if you file a shareholder action. And admittedly, some of the companies that have been under fire, Deere and Company, which made some pullbacks to its DEI program, there were a slew of shareholder proposals this time. They're recommending that their shareholders vote for neither the pro-ESG, pro-DEI ones or the anti-ESG, anti-DEI ones. So we'll see how they fall.
All right, so we're gonna be finding our way through this. It ain't over, safe to say.
It ain't over.
Simone, thank you so much. Really appreciate it. Simone Foxman, Equality Team reporter at Bloomberg News, joining us in our Bloomberg Interactive Brokers studio. Find her on X at Simone Foxman, and you can read more on her story. Just head to the Bloomberg and at Bloomberg.com. All right, folks, 26 minutes to go until we wrap up the trading day on this Friday. We are driving to the close. We have the Chief Investment Officer over at Muriel Siebert & Company. That's coming up next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. 20 minutes to go until we wrap up this trading week. On track, though, for a winning week. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the red right now, helped by weakness in the chip space. The Dow's currently down 226 points. S&P's dropped 28, while the NASDAQ is off by 0.7%. The U.S. 10-year yield is at 4.62%. Gold and oil are in the green, and Bitcoin, that's higher by 2.2%. Among the main 11 S&P sectors, leaders were utilities and telecom. Tech and energy were under pressure, and leaders to the upside in the Dow, Verizon and Walmart, while NVIDIA fell 3.5% and led to the downside. After earnings, American Express fell 2.4%, and wrapping things up, tobacco names rallied as the menthol cigarette ban was withdrawn by the Trump administration. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. Just getting word that the Container Store has won court approval to exit bankruptcy. And to hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just about 20 minutes, just under 20 minutes to go until we wrap up the trade on this Friday and for the week overall. You just heard from Charlie and Bill Maloney. We've got stocks just hovering near their lows of the session. Earlier, we were talking about that this was kind of the best start, I think, for a presidential year, going all the way back to Ronald Reagan. We've seen certainly a bounce in stocks overall in this shortened trading week.
Interestingly, he was the person to say "Make America Great Again" back during his campaign as well.
Way back when.
Yeah.
All right, so we'll
see how the weekend's up.
We're almost there. Let's get to it with our drive to the close guest. Mark Malik is here, Chief Investment Officer at Muriel Siebert & Company, joining us in our Bloomberg Interactive Brokers studio. What?
I just want to dive right into it because you walked in here.
Go.
You start talking. I'm like, the microphones aren't on yet. Save it for when the red light goes on, because you're saying the VIX should be higher. There's stuff out there that's not priced in right now. What do you see? Or do you see warning signs flashing ahead of us?
I'm not so sure they're warning signs as much as when you're watching the markets all day long, you're watching the tape, you're seeing all kinds of crazy stuff, you're hearing all kinds of things, you're hearing about menthol cigarettes, and you're seeing things go up that shouldn't be going up, you see things that are going down that shouldn't be going down, and then you glance over to your screen and you look at the VIX and it's at 14. And you're thinking to yourself, wow, I would suspect, given this market right now, given that there's so much noise out there on the tape, that this would be trading a little bit higher, certainly the VIX. And so the concerning thing is with the VIX is that when it moves aggressively. Mm-hmm. And when it sort of spends a long time where you perceive it shouldn't be like low, it tends to be like a coiled snake. So, it's sort of what happens is the smallest little thing can cause an agitation. And so you could find yourself at 28 very, very quickly, and everyone's scratching their heads, what to do.
Isn't it fair to say, though, Mark, that, certainly when it comes to policies out of the Trump administration, a lot came at us this week, but we're still waiting for what really are the particulars when it comes to tariffs. What are the particulars when it comes to tax strategy? What are the particulars when it comes to regulatory easing or not? So it's kind of maybe, we're in this wait and see mode that even though there are a fair amount of questions out there, we're kind of waiting, and maybe that's where markets are.
Yeah, I agree. I spend a lot of time, going over that age-old Wall Street adage of signal and noise, right? So, we're just taking in all the noise right now and waiting for some real signals, and they're just not there yet. And in a vacuum, it's why I believe you see the market making these interesting moves.
What about earnings? I mean, if you look at the S&P 500, we're up 1.6% for the week. That's pretty strong.
Yeah, well, earnings have been coming out pretty well, right? Mm-hmm. Pretty strongly. I mean, we're really at the early early days at this point, but if you look at earnings, if you look at earnings growth so far through today, you're talking about like what is it, like 16% earnings growth and 8% on average beats. That's pretty solid. I mean, financials came out really strong. All the banks are done. They look great. And every time that happens, well, generally speaking, those set a good base, right? Of course, it helped that Netflix knocked one out of the park this week.
That was amazing.
Yeah, an interesting one.
What do you think? Are tariffs signal or noise?
At this point, they're noise, right? It's a lot of discussion. I mean, the big question is, we all, I think, agree that tariffs are inflationary. But what kind of tariffs are we talking about? We know what might happen, but until we see what happens and how long they're in effect, if we're talking about a large tariff, but it's put on only for 2 weeks for a negotiation, then it comes off, it's not inflationary. But if you're suddenly going to levy a 60% tariff on all goods coming from China and it's long term, you can bet that that is certainly going to be inflationary. I believe the market has really sort of factored a lot of that in already, though you wouldn't know it based on the way it's moving up and down, even though you have the slightest hint moving the market. But I think most of the big players at this point are assuming the worst.
I feel like next week is a big one, right? We've got the first 4 of the Magnificent 7 reporting earnings. So we're talking about Microsoft, Meta, and Apple among them. I mean, these are big earnings, always are, every quarter. You've also got a Fed meeting on Wednesday. And while we don't really expect anything necessarily, when Jay Powell says something, we also kind of sit up and take notice. So how might next week be an important week in terms of the trade and maybe sentiment and maybe some action on the VIX?
Yeah, you certainly you hit it on the head. Next week, we got those big earnings. I think we have 4 of the Magnificent 7 next week, all very different. One of which is Tesla, which is its own indicator that I'm not really sure what it indicates at this point. Maybe it's another sort of sentiment indicator on how the president's doing. But certainly, we get our first hyperscaler next week. We get Microsoft, which plays on both sides of the AI ecosystem. So I think that's going to sort of set a lot of tone for what we can expect in that group of stocks for sure.
It's interesting. I was listening to Paul Sweeney and Alex Steele on Surveillance a little earlier today, or Bloomberg Intelligence, excuse me, and they were talking about the investment that Mark Zuckerberg announced today, the increase in CapEx. Mark Zuckerberg even said over the summer, we might be over-investing in AI. Paul Sweeney was like, I don't know. I think we might look back in a year and say this was kind of silly spending at this point. Are these companies overdoing it?
I don't believe so. I think that the market has been a little rough on some of these hyperscalers, but the truth of the matter is this infrastructure is necessary for all AI that's going to happen in the future. And this is the investment that has to happen. And those that make the investment are going to reap the rewards. On the side of Meta that you brought up, that's an interesting one because they're not necessarily a hyperscaler, but Meta was really the first company that came out and said, hey, we're using this AI to make more money in our core business. And they were rewarded for that. So, we're going to be listening to them next week and see if there's a follow-on story. But that type of investment, I feel like you would actually be punished if you weren't talking about those types of investment at this point.
Just got about 45, 50 seconds left here, Mark. So where would you suggest investors think about allocating money in this environment?
Yes, so until we hear any new signals, we have been talking about, we've been looking at a continuation of what we saw last year. Okay. Essentially, tech is leading the way, not a lot of breadth. There are a lot of, value opportunities out there, but there are no signals that suggest that those sectors are going to have great returns. So you're going to see a continuation of financials, even though they're a little rich at this point. And I think tech has the biggest potential upside, the broader tech.
So the drum that everybody keeps beating about small caps and mid caps, not necessarily for you guys?
Listen, you could try to get cute, but I think people who've been trying to get cute have been on the losing side of the performance game lately. So.
I don't want to be cute. I want to just have returns. That's what I want.
Yeah.
We're going to leave it on that note. Listen, thanks. Fun to have you here in studio. Mark Malik,
Thanks
who's
for
Chief
having me.
Investment Officer over at Muriel Siebert and Company, joining us here in our Bloomberg Interactive Broker studio.
Okay, S&P 500 down 0.4%. The NASDAQ down 0.7%. Let's round that up. The Dow lower by about half a percentage point.
Yeah, we just talked about the VIX. You got the VIX right now. Call it little change, a little bit lower at 1484, as we said, well off of any kind of level that we've seen as of late. All right, do not go anywhere. We're going to head over to our TV colleagues. We're going to count you down at the close on this Friday. This is Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we are getting ready. Just under 7 minutes to go until we wrap up the Friday trade and the trade overall. It was a 4-day trading week. It's hard to remember, but the inauguration was on Monday. It's been my concept of time is I don't know where it's going.
It's been wild.
It's been wild.
Hey, I think also we had it was a weird week because we covered the inauguration, but the markets were closed.
Right.
So it's kind of empty on Wall Street.
Yeah.
But there was still a lot going on.
Kind of weird.
And then the first week of a new administration that is wasting no time in getting stuff done.
Yeah. Speaking about getting stuff done, Spirit Air, man, they're thinking about, I don't know, they want to kind of reboot their image. So what they're doing is they've updated their passenger dress code with new restrictions on lewdness, building on efforts by the discount U.S. carrier to shake off its image as a downscale brand.
So,
what does this mean?
There's like a saying, Carol Masser, if there's a rule...
halters.
Well,
no,
I will
bikinis.
Tell you,
what is this?
I'm just going to say, I didn't know this was an issue.
What?
But there's this old saying, right? Like, if there's a rule about it, it's been an issue in the past, something like that.
Yeah.
So on Wednesday, the company expanded its definition of being, quote, inadequately clothed. It's including now barefoot, wearing see-through clothing, having parts of the body exposed that I'm not going to read.
They all start with B's.
Private parts, they say, or having body art that is lewd, obscene, or offensive in nature. Again, did not know this was an issue.
First of all, come on, put shoes on if you're going on a plane. And you know what? Yeah, no see-through clothing. That's all I'm going to say. And having those B parts of the body covered is probably a good idea.
So I don't get it.
Okay.
Spirit filed for bankruptcy back in November. It ditched its bare bones business model last year. Its effort is to go more upscale. It's offering fares that include extra legroom, free checked bags to take advantage of growing consumer demand for premium travel.
Wait, did you see this?
Go ahead.
The rules are listed in the company's contract of carriage, right alongside restrictions on boarding a Spirit flight while, quote, carrying an infectious disease or appearing to be intoxicated or under the influence of drugs. When's the last time you carried an infectious disease? I guess that was like
knowingly?
Yeah, I don't know.
Or not knowingly?
I guess you could do it by mistake.
Yeah, so this is Charlie Pellet sent us this one.
You know, it's funny. I always think about my grandparents when they went to Europe, and we all went to the airport to see them off. And my grandfather was in a suit, and my grandmother was in her hat and gloves, and it was all kind of super formal. And I am guilty. I've got yoga pants on and a comfortable shirt, but I hope I don't look like a slob.
You don't, and I will say, I'm not to sound all get off my lawn, but now at the airport, what you see is people in their pajamas.
Yeah, and slippers.
And I'm
carrying a
please
pillow.
Don't be next to somebody who is not going to be wearing shoes.
I know.
Don't
I do take my shoes off the limb.
That's why we don't sit next to each other on the plane.
I have socks on. I like to be comfortable. It's kind of interesting, but as you said, they are working to improve their image, shed their reputation, and as you said, also they're emerging from bankruptcy, so maybe they're just thinking about kind of their way forward and how to change things. I don't know. Does this do it?
Carol, you're allowed to take your shoes off because
Sarah Lizzie is telling me to put my shoes on.
Here's why Carol can take her shoes off on the plane, because she sits in a part of the plane where they give you slippers to put on.
Sometimes they give
you little socks. So I think and there's
little
not too many people near her.
Little pillows.
Hey, before we go, one of the most read stories in the last hour.
We're not going anywhere, buddy. We got to close this market.
Howard Lutnick is he's President Trump's nominee to lead the Commerce Department. He detailed his wealth and influence across hundreds of firms. He left open the possibilities of his adult children buying his holdings if he wins confirmation.
Interesting. Well, nominees have to do things, right? So I guess if you pass it on to your children, right, then you would assume involved directly.
Yeah, and it's interesting because I think his agreements aren't really meant for people who have so much money.
Okay.
Because you're supposed to put a range in of assets, and the highest one is above $50 million.
800 legal entities?
Yeah, I mean...
That's a lot of stuff, folks.
Once again, Carol, the lawyers, they're the ones making the money.
I know. This is why, my daughter's like, I'm thinking of being a lawyer. I'm like, maybe that's not such a bad idea, because lawyers are always busy in almost every story we talk about. We just talked about DEI. That's the other thing, right? Lawyers have been getting calls off the hook. I'm just going to say, I'm looking at the trade right now. We are just rounding the curve, so coming off our worst levels of the session. Do not go anywhere. Tim and I heading over to our TV colleagues. We're counting you down to the close. The closing bell starting right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through that closing bell. A global simulcast starts right now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. A down day, an up week, Carol, make sense of it for me.
Yeah, I don't know how to make sense of it. It's so funny. We just had a market guest on saying, there's so many questions out there about what we're going to get from the administration, tariffs, trade, tax policy, and yet you've got a VIX that is just below 15. And he just said, with all these questions out there, he thinks that volatility and concerns about the market should be a little bit higher.
Well, we did get one answer with relation to cryptocurrency yesterday in the White House just before the market closed. We saw the crypto czar in there, David Sachs, along with President Trump, signing an executive order related to crypto. We didn't see Bitcoin move yesterday, but it's moving today up 2%, 105,000 for Bitcoin.
Yeah, but that's not a move for Bitcoin at all. That might as well be unchanged.
It's so hard to attribute Bitcoin's move in any direction to any single thing.
Yeah, absolutely. I mean, there are a lot of known unknowns in this market right now, and I feel like maybe at the end of a very busy week, people are just breathing a sigh of relief that it's kind of come to a close, and we're going to gather up our strength to get ready for, next couple weeks and months of a lot of headlines.
I like when Scarlett comes in hot. I'm just going to say, I'm just going to put it out there.
It's because they wheel her in.
I know.
Now,
right?
a lot of funds also, though, you can make an argument like CTAs and vol-controlled funds are going to have to buy soon, particularly if volatility stays low, and you wonder if we're going to see that as like the next leg higher for equities.
We get the closing bells here in New York. It is red across the screen on the day, that we should point out stocks still holding 2 straight weeks of gains right now. The S&P 500 is going to settle right around that 6,100 level. That's down about 17 or 18 points from where it was yesterday, a drop of about 0.3%. A similar percentage drop for the Dow Jones Industrial Average. The NASDAQ Composite down about 0.5 percentage point. The NASDAQ 100 down 0.6 percentage point, while the Russell 2000 is going to close out the day lower by about 7 points or 0.3%.
All right, quick check on the S&P 500 in terms of winners and losers. You've got Scarlett, 249 names to the upside, 248 to the downside, so almost an even split there.
Yeah, and a pretty even split, too, when you look at the sector performances. 2 groups finishing up by more than 1%, communication services, as well as utilities, and also 2 groups finishing down more than 1%, and that would be tech and energy.
All right, guys, let's get to some of the winners and losers, gainers on this Friday. Novo Nordisk is one of them, up about 11% at its highs today, finishing the day with a gain of about 8.5%, rallying the most since August of 2023. They did put out some news about their experimental shot that delivered as much as 22% weight loss in early stage trials, boosting investors' hopes for the drug maker's pipeline. There's been a lot of worries. This stock has been under the ADRs, and also the stock overseas has been under a lot of pressure over concerns about kind of what's next for GLP-1 drugs and the pipeline. The results basically putting this drug maker back into the contested race about who can deliver the most from all of these weight loss drugs. So definitely a standout in today's session. Meta also a little bit of outperformance there, up about 1.7%. Mark Zuckerberg on Facebook putting out a post saying that Meta plans to invest as much as $65 billion on projects related to artificial intelligence this year alone. That's more than what they were expected, and that includes building a giant new data center, increasing hiring in AI teams. So that we saw some outperformance there. And Paramount Global, I thought this was a done deal, but apparently not. This one as high as 3.7% earlier in the trade, finishing the day up 1.9% here. This, as Variety reported, Project Rise partners to make a bid for Paramount, offering up $19 a share, all cash. That's a competing bid to Skydance Partners, which has offered up $15 a share. So once again, it seems like maybe possibly in play here, but definitely a gainer in today's session.
If this story were like a series on a streaming service, it would be like in its 8th season at this point. The story is just not ending. Hey, I want to look at shares of Boeing today, down by about 1.4%. They did that surprise announcement late yesterday, reporting preliminary 4th quarter revenue that missed consensus estimates. The company did say that last year's strike affected the results. It noted charges for certain defense, space, and security programs, as well as costs related to previously announced job cuts. I will say Julie Johnson and the team, our aerospace team, they've got a great big takeout about Boeing, and Elon Musk challenging Boeing just last month in person with Kelly Ortberg. So go check that one out on the Bloomberg terminal. Intuitive Surgical falling today by just about 4%. They make the Da Vinci surgical robot. The company did come out with a profit margin forecast for the year that trailed expectations. It also warned about potential impact of new tariffs. Could actually be material. Shares falling today by 4%. And this is an IPO, and yes, it's in Alex Steele's world, a natural gas exporter that went public today. Venture Global falling 4%, even after slashing its price target ahead of its IPO. Shares fell. The IPO price was $25 a share. This is not a great look. They sold 70 million shares in the middle of a reduced range to raise $1.75 billion. The market cap is about $60 billion at this point, roughly $58 billion. It was looking for a market cap of $110 billion before it scaled back its offering this week.
Yeah, we already talked to the CEO, Tim. Like, you're way late on that. I mean,
wow, you guys are,
So what did the CEO say about this?
So I asked in a couple different ways in terms of the reduced price, in terms of the pop. And, you know, on your IPO day, you're going to say you're really excited about your IPO day and you're really happy that you raised $2 billion and that you're going to use it and make more money.
So he's very consistent in his responses.
Yes, so there is that. But I'm interested to see how it continues to trade, who winds up actually owning it, hedge funds or institutional investors, if they're energy people or not. I can go on and on. Instead, I'll go to the bond market.
But don't get mad that I'm not watching your show well.
I am, because the screen's right in front of you.
Okay.
Oh, and I know this because I watch TV when I'm on radio. Anyway, let's go to the bond market.
Wow.
Going to the bond market.
Is it the bond market calling?
Right.
I think the bond market's calling.
Yields are lower. That's pretty much it. But I did want to highlight a lot of supply coming on Monday. You got the 5-year and the 2-year. You're looking at $140 billion of supply coming on Monday, and you got the 7-year on Tuesday. That's kind of ahead of that Fed meeting on Wednesday. So let's definitely watch those.
Guys, I don't know what you guys are doing this weekend, but I think it's time to go to Washington.
We're rewatching Alex's show. We're rewatching Alex's show. That's what we're doing this weekend.
But you can go to Washington, D.C., and you can see the pandas. They're there. Bali and Qingbao are the new pandas in Washington, D.C. They've come back. And the Panda Cam, if you want to stay in and watch Alex's show, you can also have the Panda Cam.
Okay, first of all, it's not my show. It's our show, you guys. It's our show. Panda Cam, I had it up all day today. What about you guys?
Did you see them do anything?
Well,
yes,
again,
they
ate,
they rolled, they walked.
Our work. Again, we were doing work today.
You know, years ago, I took my daughter there. Like, we did a trip because she was so into pandas. And I got to say, it was pretty cool to see them in D.C. That was before they were yanked out and brought back.
They're just really cute. They're all over my Instagram feed. They're like little kids, and they're really wobbly and
they're a little ferocious, though, you know.
Bumbly.
They're a little ferocious.
That too.
You don't want to fall into the pit.
I mean, are you a Panda Cam lover?
These are ferocious?
Yeah.
Oh,
these
they
are
can
cute,
be.
though.
Yeah.
How do we know this? Is there evidence of this? I've never seen a panda attack anyone.
That's probably
Google
good.
pandas going wild or something.
I'll pass on
I
that.
really don't
reality
want to do
show.
I don't know what that's going to do. You trying to get us
All right.
fired?
Well, having said that, all right. So they're loved in D.C. They're also loved in China. We know that as well. But apparently, the fan culture in China is getting, I don't know. The government's getting kind of a little tough on them. They've sent a chilling message. This is coming from the New York Times to Panda fans to watch what they say online. Specifically, some online influencers have been arrested or questioned over what the authorities called rumors and radical fan culture when it comes to pandas.
Yeah, it's a little wild. The police, according to the New York Times, have targeted people who've advocated for animal welfare, or they've criticized these overseas exchange programs, like the one we're talking about in Washington. State media, though, has also published warnings about broader panda fandom. The New York Times notes that the move comes amid Chinese leader Xi Jinping's crackdown when it comes to internet fan culture.
They've arrested people for spreading false information about pandas. Like, what do you spread?
That they rip people's faces off if they don't? I mean,
No, I think there was some criticism about how maybe some places were really aggressive with making sure that the pandas definitely propagated, and they weren't being super considerate when it comes to making sure the pandas were taken care of, as opposed to like making sure that there's enough pandas available.
Yeah, some animal welfare. Okay. Bum, bum, bum. All right, that was a down note.
Go see pandas.
All right. Yeah, pandas. Panda Cam. Everybody. All right, that's a wrap. Have a safe weekend. Stay warm, everybody. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place on Monday.
All right, our coverage continues here on
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
That's Carol Masser. She's reminding me that it's time for us to turn on the microphones and talk to Red Brown.
Pandas can be dangerous.
What are you doing?
They have strong teeth and powerful jaws, and they can be bite. They can also be aggressive when fighting for territory mates. What? Like, man, those guys are a rough crowd. You do not. They're, you know.
All right, let's go back to TV and tell
They
them.
usually avoid confrontation, but they will fight back. Should we talk about
Monday,
something else?
when we see Romaine and Alex and Scarlett again, we can talk about this.
Okay.
How's that?
Yeah.
Hey, we're about to be in it.
Yeah.
And by in it,
Earnings.
I mean the thick of earnings season. That's right. 4 of the so-called Mag 7 companies are going to report slower quarterly sales next week, with cautious consumer sentiment and the adverse effects of a stronger dollar seen as common themes. We've got with us Red Brown. He's Bloomberg News earnings reporter. And you know what? We're not just going to talk about earnings today, Carol. We're going to make him tell us all about these cannabis cocktails that he's been writing about. He joins us here in the Bloomberg Interactive
Wait,
Brokers.
earnings and cannabis
I know.
cocktails.
You know what? Kill two birds with one stone.
The show's off the rails.
Yeah, I know.
It is. Oh, hey there, Red Brown. Okay, let's start with the big names that are reporting next week. We heard from Netflix this week, one of the FANGs. We don't really talk about the FANGs anymore. We talk about the Mag 7 now. Expectations, what are they looking like?
Well, I guess it depends on where you want to start. Maybe we can start with Apple. Still everyone's favorite company. So when we think about Apple, it's kind of a similar pattern that we've seen in recent quarters. Difficult product environment, as I think you touched on a little bit, with sales kind of slowing down a little bit, but still strong services. Expected to see another quarter of double-digit services. And then also, we're talking about pandas, so we can talk about China when it comes to Apple as well. And with China, I think, the forecasts are actually for a 4% growth, which would be the first expansion for the first time in a year and a half. But Bloomberg Intelligence is kind of pumping the brakes on that opinion. They say that it's a big ask for the company, with data there suggesting a drop in sales volumes and iPhone sales. So. Yeah,
we talked to Mark Gurman about this week, which is like every January. I don't want to say every January ever, but in the last few Januaries, we've gotten these concerning reports from analysts about what's happening in China with iPhones. And that's been the big concern now. I mean, you see Apple shares taking a hit so far this month.
Yeah,
it's double trouble over there because it's like they're having it's just increased competition and just an overall kind of worrying, I guess you could say, consumer environment to like splash out on $1,000.
I feel like a lot of it's out there, though. You know what I mean? So I wonder how much would be like surprise, or you know what I mean?
Yeah.
It could be concerning, though, if people are calling for growth there.
Yeah.
And then if it's not going to come to pass, I think maybe people are just looking for some optimism finally coming out of China and a little bit too soon.
There's been a couple of downgrades, too, right?
For Apple.
Didn't we have like we had one analyst on, right?
Oh,
Was it
yeah.
Apple?
Oh, we did not have that. Oh, a few weeks ago.
Yeah.
Yeah, a few weeks ago.
There's been a couple. There's been 3 of them.
I'm gonna go.
That's what I thought.
Okay, you're gonna ask a question.
Let's get this back on the rails.
You're gonna ask a question while I go find out exactly who this was using the Bloomberg terminal.
No,
okay.
Red already found it. It's with the guys over at
Okay, there's Barclays, Jeff.
Moffett-Nathanson?
Yeah, it is. You're right. Craig Moffett. Thank you.
Got there.
That was on January 7th.
No, but it's interesting. Like, you don't really see that. Or you don't really see it on... Help. All right, we're canceling the wine guest because there's no way we can do this today. Okay, so... But Apple's a big one. And it's consumer, it's tech. There's a lot going on at that company.
Definitely. And if we want to be even more just like tech-centric, without the consumer maybe so much, well, that's unfair. But Microsoft also, I guess, because we'll get a little bit more AI with that. There's one thing that, I'm not seeing a ton of chatter with Apple is like kind of AI ambitions. Obviously, they made that big promotion to kind of, today, I think the news came out, promotion within the AI group to maybe shore things up. One company that is doing quite well with AI is still Microsoft. And again, sort of repeat of similar stories. We're going to be looking at their cloud segment, how much is that going to grow, how much do they think it's going to grow, and what the AI contribution will be there, and then also their capital expenditures.
Speaking of CapEx, $80 billion from Microsoft, $65 billion from Meta Platforms when it comes to AI. It doesn't, like, this stuff used to bother investors. Yeah. Like, I remember, last quarter before that, you'd see a sell-off if CapEx came in too high. It doesn't seem to be doing that now.
Yeah, I think Meta is up today on the news.
Yeah, it's pretty remarkable.
Yeah. But they also, we had a conversation about that. They also came out, and was it Threads that they're going to...
Yeah, but that's
they're
such
testing
a small business, right?
I know.
Isn't it?
I don't know. I agree. It's kind of an interesting trade today, right?
Yeah, I mean, I wonder if the narrative sort of flipping kind of to Tim's point where, there was a couple quarters back where everyone was getting punished for not showing enough kind of progress on AI despite, $15 billion, whatever they're spending every quarter. And I wonder now if it might be the opposite, where if you're not spending enough, then you might get punished.
Where do you want to go next? There's so much next week.
Yeah.
I don't want to...
Tesla?
That works.
Okay.
Are we going to hear from Elon Musk, or is he too busy?
That's a good question.
Yeah.
In his new gig at the White House.
Call in from like where is he? He's at the...
He's on a plane somewhere.
No,
he's going to use Starlink.
No, he's at the White House. He's got an office, the executive branch, right?
I have no idea where he is.
Executive offices, isn't he?
Yeah, he's got an office.
He's in the West Wing.
Like, go in and be like, hey, I'm in the West Wing. Like,
maybe he'll be in the Oval Office.
Okay, so what are we looking for him?
Well, we already saw that they had their first deliveries decline this year, so I think a little bit of the focus will shift towards their growth gross margins. Last year, the big narrative was the price war in EVs, and analysts are expecting that to kind of continue to linger into this fourth quarter. There is a little bit of a worry that, combined with some currency exchange costs, Tesla is huge in Europe and China, obviously, could result in them missing their gross margin expectations. So definitely want to keep an eye on that. And then, of course, the delivery numbers as well. A lot of question marks about where they'll set the bar for 2025. So
they have a new Model Y coming out, right?
That's right. There should be a new, that's the upgraded SUV.
Okay.
Has come out, but then there's also the long-awaited mass market model, and I think that's where analysts.
When is that happening?
Exactly.
That's the question, right?
Well, yeah, I mean, I was reading one report, and it was actually like it really stopped me when one analyst was like, "We're really uncertain about our." He used the word uncertain, which analysts don't typically do, to describe his estimate for the full year. And I think that just really speaks to the fact that like no one knows where the company is kind of at when it comes to this model. So, and the estimates range from 1.7 million for 2025 all the way up to 2.3 million. So a $500,000 difference there is quite significant when on this main metric.
All right, I'm done with tech earnings. Let's talk about something we really care about.
Cannabis.
Cocktails.
The first line.
Wait, how does Red Brown, who does earnings, get to do a cannabis cocktail story?
I think, I was writing about Dry January. I was going through Dry January.
We're still in there, buddy.
It was last year. I was suffering through Dry January.
Only January 24th.
And I was doing a little bit just helping out, writing about the alcohol and cannabis space. And yeah, this story came across.
I don't know if cannabis cocktails count as Dry January.
How much sampling did you do?
That's I was some on the ground reporting. You have to see what the hype is about.
So not really a Dry January.
Well,
as Tim just said,
they call it California sober.
We're not mom and dad.
Remember I told you this?
Oh yeah.
California sober.
Come on. All right. So tell us about the sampling you did.
All right, so the sampling, what do you want to know?
I don't know. Like, what'd you try? What'd you like?
Well, so I definitely tried Pomos, which is what the story was about, and that's a little bit of a different form than most of the kind of the brands that are hitting the market, which is more of like a ready-to-drink type thing that we're seeing a lot of the times, like a seltzer.
Yeah.
Pomos is actually kind of wanting to be more of a liquor alternative.
So you pop into other stuff.
Exactly, and it mixes in with pretty much anything you could want to make, and it's good. It's fun. It's kind of is as advertised. It works.
He's smiling.
Quick.
If you're listening on radio, he's just broken out.
Let me make sure I have this right. Yeah. So it's cannabis infused, so it has THC in it, like the same THC you'd get from having a marijuana mint or an edible or something like that. This is
or smoking a joint.
Or smoking a joint. What's the regulation around this?
Yeah, this is the really interesting part, is that these are federally legal. All these drinks, you can have them shipped to your door if you really so desired. And it comes down to a kind of loophole, a quirk, whatever you want to call it, in this like obscure legislation called everyone calls it the Farm Bill. It's this huge document that regulates subsidies to farmers. Mm-hmm. And within that, for maybe the first time ever, the federal government defined any plant that had less than 0.3% THC by dry weight is no longer cannabis. It's called hemp. It's this new, everyone's heard of hemp, t-shirts and paper and things like that. But now there's a legal distinction of what hemp is. And that basically descheduled or removed THC, if it came from hemp, from the DEA's Schedule 1
But
drugs.
it's not actually coming from a different plant, is it?
It's the same exact plant. Hemp basically only exists in the law.
Is it such a small amount that there's no bang for the buck?
Well, here's the thing. So when it comes to...
Just saying, great that it's delivered, but if it doesn't,
It's a great question because...
Real quickly.
Where it works is, as long as the ingredients that you use, the THC, is less than 0.3% by the dry weight of the other ingredients, it's all good.
All good, Red Brown says. Happy Friday, everybody. It's 5 o'clock somewhere. Red Brown, he is Bloomberg News earnings reporter and apparently cannabis cocktail reporter as well.
How about some wine? That's right after this.
Let's do it.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A down Friday, an up week on the week. The S&P 500 index gained 1.7%. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A relentless rally in stocks took a breather today. The S&P closing close to a record, but the market still had its best start to a presidential term since Ronald Reagan was sworn into power in 1985. A rout in chipmakers weighed on stocks today. S&P was down 17, down 0.3%. NASDAQ down 99, a drop there of 0.5%, while the Dow slumped 140, down 0.3%. 10-year 4.61%, the 2-year 4.26%. Spot gold up $15 the ounce, $27.70, up 0.6%. West Texas Intermediate crude little changed on the day, $74.59 a barrel. Bitcoin up 2%, 105,243 on Bitcoin. Novo Nordisk up the most since August of 2023 after its experimental shot delivered as much as 22% weight loss in an early stage trial. Today, Novo Nordisk was up by 8.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, when you think of how to get wine, you probably think of the classic wine bottle, maybe a cork made of wood, maybe cork made of other material.
Yeah, I do.
Cork made of cork.
A cork made of cork.
Kristen Oshelsky wants to change that. She's the founder and CEO of Nomatica Wines. It distributes its wines not in bottles, but in cans, boxes, and kegs. And we've got a few of the cans with us.
They're beautiful,
right now.
and we're going to talk about that in a moment.
She joins us this afternoon from Malibu. Kristen, good to have you with us. First of all, you and all of your neighbors in Malibu, in the Palisades area, in all of Southern California, have really been in our thoughts as we've seen images and heard from folks over the last few weeks, members of our own team who've been affected by these devastating wildfires. How are you doing?
Thank you for asking. Also, just thank you for having me on today. Longtime admirer and big fans. This is exciting. And a bright spot in my week as, unfortunately, I'm calling in from Palm Springs as our house burned down.
Oh my God, I'm so sorry. Oh,
I think it's a really insane time to live in Los Angeles because everyone I know knows a dozen people who lost their homes, minimum.
Wow.
Never mind all the businesses and just everything. It's tough.
Yeah, it's absolutely devastating, and our hearts are with you.
and we had no idea. We weren't sure, actually, your status. And yeah, I can't even imagine. How long, can I ask you, or can we ask you, how long you've lived in the area?
So I've lived in Los Angeles for almost 10 years, and a year and a half ago, my husband and I moved to Malibu. He grew up in Southern California as a surfer. We both always wanted to live by the beach. It was kind of our dream, and we found the perfect rental. And, I do have to say I'm so grateful that we got to live there for the time we did. It's such a special, peaceful, beautiful community that will be forever changed moving forward. And I enjoyed it every moment I lived there.
Do you think you'll go back?
Probably not. No. I don't think I can ever live in a wildfire area again after that.
Does that mean leaving California?
No, absolutely not. Especially because we are a California wine company. And Los Angeles is my home. It's my community. I think it's one of the most innovative and interesting wine scenes in the U.S. right now. And I very much want to remain an integral part of building that. But we're going to live probably in the middle of Los Angeles where it's a little bit safer.
So let's talk a little bit about the wine that you mentioned. You do get the wine from all over California. Where are the vineyards that you source the wine from?
So one of the beautiful things about our brand, our name is kind of a double entendre, Nomatica. You can take it wherever you want to go, and we have a nomadic sourcing style. So my job, I guess I'll get into my background a little bit, and then I can talk about our vineyards if that's okay with you.
Please.
Amazing. I spent a decade plus as a sommelier in Michelin restaurants. So running and working in some of the best wine programs in the country, tasting the best wines in the world, typically talking to a 45 plus wine collector. And when I was working for Nancy Silverton at Austria Mozza in Los Angeles, she was on a Netflix show called Chef's Table, and it entirely changed the demographic of who's coming in. For the first time in my life, I was talking to people my own age, and they did not want to drink wine.
What did they want to drink?
Anything but wine, basically. So beer, soda, tequila, like anything but wine.
So you said, I'm going to make wine because nobody wants to drink it.
Yes. Well, I started talking. I was like, why don't you want to drink wine? It's the most ancient beverage. Nothing uplifts and enhances a meal like wine. And there's something beautiful about sharing wine with your dining partner.
I totally agree. It's one of my favorite things is sitting down to a great meal and having wine. I have a 21-year-old too who it does feel like they are just like all these mixed cocktails, but she is learning to and has appreciates, a great glass of wine. And it's really fun to kind of see that with her and share it with her.
You're doing God's work, making her palate clear.
All right. Well, tell us about the work that you guys are doing, because I am curious about kind of, first of all, we have the cans with us. You shared with our producer, Paul Brennan, and we've got a bunch of them. They're really beautiful cans, but I also care about what's in them. So tell us about, the vineyards you're working with, how you're making it, how you think about what's inside the can.
So when I was talking to these young people, I started realizing why they weren't drinking wine, which few factors. People believe that great wine needs to be expensive, which it doesn't. There was a lack of knowledge, which people were intimidated. A lot of consumers feel like they need a PhD in order to enjoy wine. And there's a lot of misinformation about wine out there. So I wanted to be kind of a sommelier to the masses and curate and select styles of wine that would be appealing to a wide range of audiences, bring the younger consumer back, and also make it really easy to choose high quality wines. So I brought on famed, amazing winemaker Kent Humphrey and Corey Alberry, who's our current director of operations and winemaking. Ken Humphrey ran Eric Kent Cellars, makes award-winning Pinot Noir and Chardonnay up in Sonoma. And Corey has spent time over a decade running some of California's best vineyards and also spent some time at Costa Brown.
So I'm going to actually open up one of the, and often like when we have somebody on from a vineyard or, it's a cork we're pulling out, but it is a flip top.
I love it. Sounds of the can crack.
Which I have to say, for those of us who are doing different things on weekends, there's times I don't want to have to open up a bottle or something that I'm increasingly popping open a can.
I will tell you, I saw a bunch of these on our producer Paul Brennan's desk a little earlier today. And a couple hours before our show, I heard that noise. I turned around and I said, Paul, it's too early. It's too early to be opening these things. He didn't do it. He was opening something else.
Lunch wine.
All right, so tell us, I'm opening up the red, and I'm giving it Tim and I. So tell me what I've got here.
It's a blend.
They're Nomatica. It's a blend, right?
It's a blend. So we source, again, from all over California, but primarily from Mendocino, Sonoma, and Lodi. Those are areas that we find off the bean path grapes that deliver high quality without the price tag. So what you're drinking is one of my favorite wines that we do. It's primarily a grape called Tiraldigo. So cut my teeth in Italian wine. That's where my passion and heart lies. And I was so excited to find one of my favorite Italian alpine varieties growing in Lodi. And so it's about 90% Tiraldigo with a little Merlot and Malbec mixed in, separately fermented and then blended. The Tiraldigo is aged for 9 months in neutral oak because Tiraldigo is a slightly tannic variety, and we want it to be poppy, crispy, crunchy, have all those alpine herbs, lots of bright red fruit, but still a little mellow. Sometimes tannin can be aggressive out of a can.
Yeah. Can I just say, Kristen, there was a little bit of like bubbly, like a little bit of, once I poured it. So what is that?
So that is just because we are not using any SO2 in our cans. No, you don't need sulfur. I'm not a sulfur purist as a sommelier. I know that's a little divisive within the wine community right now. I don't mind a little sulfur in my wines, but you don't need it in the can, but that's just the canning process, and it'll blow off in the glass.
Hey, Kristen, we've had some wine folks on over the past few months, and they've told us about challenges in the industry with wine sales going down over the last couple of years by some measures. What are you seeing?
Nomatica is growing rapidly. This year, we're on track to double our business.
Wow.
And last year, we grew the business 20% in a very difficult year.
That's amazing. How do you attribute that? I mean, are you small because you're starting from a smaller space, you're increasing distribution, you're offering something that's not necessarily out there?
We were the first people to do fine wine in can. We were the first to go to market with a nationally distributed orange wine, first to go to market with a nationally distributed fine wine in a box. I think early mover advantage, and I'm a millennial. I saw the writing on the wall for the wine industry. And so we are really trying to be a force of change and showing people that wine isn't dying, people are just drinking it in a different way.
So speaking of drinking in a different way, I'm a big fan of non-alcoholic spirits, and I noticed that you guys have teamed up with Proxies to create a non-alcoholic bubbly white. How'd you do this?
So I've loved Proxies for years. Non-alcoholic wine has a long way to go.
We know. We know. We've tried some. Some of it's great, by the way, and some of it's not.
Yeah. Gosh, it's as a sommelier, I haven't been able to find one that I've been really excited about that speaks to the same quality that I expect from a bottle of wine. But when I found Proxies, it's not just de-alcoholized wine. Because all of our wines at Nomatica, they're, practicing organic. There's no chemical manipulation. There's 0 grams of sugar, no ingredients added. And so I wanted to take that same approach to our non-alcoholic project. And so I teamed up with the entire amazing genius team at Proxies, which also has Acid League. They're old school CPG founders. And we came up with a blend of proprietary herbs, juices, floral tinctures, all of the things you love about wine, but in an all-natural way.
So my wife likes wine, and I'm not a big drinker, as you know, Carol.
No, I know.
The problem is when she buys a bottle, we don't finish it in time. That's why these single-serve cans work for us.
It's exactly why we do it, too. Listen, this has been a lot of fun, and I hope you will come back because we've run out of time. But I also love this whole idea of these responsible farming practices because I feel like we are increasingly, vineyards are seeing what's going on in the climate, and so they understand about figuring out how to do things, thinking about the environment, and doing it sustainably. Kristen, we wish you well, and so glad you could join us, and we look forward to you joining us again. Have a great great Kristen Olszewski. Excuse me, Olszewski. I only had a little bit of wine, but it's been that kind of week. Kristen Olszewski. She's founder and CEO of Nomadic Wines, Nomatica. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A relentless rally in stocks took a breather today with the S&P 500 index ending just above 6,100. 6,101 down 17, close to a record, down 0.3%. Was a winning week with the S&P this week up 1.7%. The Dow down 140, down 0.3%. NASDAQ today down 0.5%. 10-year 4.61%. The 2-year 4.26%. Spot gold trading higher by $16 the ounce, $27.71, up 0.6%. And West Texas Intermediate crude down 0.1%, $74.56 a barrel. So a down day on Wall Street, but Mark Malik, Chief Investment Officer of Muriel Siebert, right here on Bloomberg Business Week, told us he does like what he's seeing with earnings.
Yeah, well, earnings have been coming out pretty well, right? Pretty strongly. I mean, we're really at the early days at this point, but if you look at earnings, if you look at earnings growth so far through today, you're talking about like what is it, like 16% earnings growth and 8% on average beats. That's pretty solid.
Mark Malik of Muriel Siebert, interviewed right here on Bloomberg Business Week. Today, Verizon out with earnings up 0.9%, T-Mobile, and also AT&T report next week. Starbucks has Chairman and CEO Brian Niccol, who joined the company in September, got total 2024 compensation of $95.8 million. That includes $90.3 million in stock awards. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, if you've been listening or watching, you know we just spoke with Kristen Olszewski, the founder and CEO of Nomatica Wines. We learned that she lost her house in the recent fires in Malibu. Sadly, she's not alone. CAL FIRE says at this point more than 16,000 structures have been destroyed. Not all of those have been homes, but we're still waiting for a full accounting of the devastation. When someone loses a home, they lose not just their place to live, but all of the daily essentials that one needs to live. So in addition to losing those things that, you know, might be very valuable to us from a sentimental perspective, like
you have
old family
now.
photos, you have nothing. You need clothes, you need cooking supplies. If you have kids, you need baby gear, diapers, formula, school supplies. That's exactly where Baby to Baby comes in.
It is exactly where they come in. It's a nonprofit that provides children with the essentials, and this organization has been extremely busy due to the fires out in the LA area. Kelly Sawyer, Patrick Hoff, and Nora Weinstein are the co-CEOs of Baby to Baby. They join us right now from Los Angeles. Kelly and Nora, it's really great to have you here with us. We want to get into what you guys have been doing, but Kelly, let me start with you. Just tell us about what you guys have been experiencing over the last couple of weeks, and I hope your families are fine. I hope your homes are okay.
Thank you for asking. Yes, Nora's been evacuated, and I've had some people staying with me who lost their homes, but our team has also been affected, and it's been, you know, everyone in LA is affected in some way or knows someone who's lost a home, so it's been a lot, but our team has been working around the clock. We have been able to distribute 6 million basic essentials. Wow. Some of those things you were mentioning: diapers, formula, clean water to make formula, cribs, car seats, strollers, food, and so much more. So we know that in a disaster like this, children are always hit the hardest. And a lot of people are focused on adults. So we're really focused on children and babies and all of their needs. So that's what we've been doing since the fires broke out.
Nora, is this typically how a Baby to Baby responds? Because you know, when there aren't natural disasters happening, which unfortunately seem, when it comes to timing, you know, fewer and further between in this day and age, you're still distributing these items to people, especially kids all over the country who do live in poverty. How is now different than your typical round of giving this stuff away?
Right. Well, that is true. And we have provided 450 million basic essentials to children over the last decade. And so the benefit of that is that we do have an expertise in this, and we obviously, although we're a national organization, our hometown is Los Angeles, so we do know it very well, and we know how to reach the most vulnerable kids. In this instance, the way that helped us is that immediately after the fires broke out, we were able to contact 470 partners that we work with on a day-to-day basis. So that spans schools, emergency shelters, evacuation shelters, hospitals, resource centers, entire state agencies. And that way we were able to garner their requests right away and start distributing immediately. I'd say the biggest difference of a lot is the same, because the items that are needed in a disaster or everyday poverty are similar, where diapers are always the #1 item requested because they're so expensive and the need is so high. But things like formula, baby food, hygiene products, warm clothing, that all stays the same. I think what's different here is that it's hitting us so close to home. And so it's just, as Kelly said, our own team is impacted, and then but then just working around the clock, but really knowing the city and the ins and outs very well.
Yeah, and we've talked so much here at Bloomberg about the people who have been displaced, and Nora, we're sorry about certainly the losses you have seen and all of your team members. It's just so dramatic, and just trying to understand, like, what's the way back, right, in terms of building and kind of getting back to normal. How do you guys continue to support these families that, may not be in a home again for a long time, and maybe moving around? So I'm just curious how you continue to support them and how that works.
So we've been hosting pop-up distributions, whether at our headquarters or across LA County, and that's where we bring our team and all of the basic essentials that we provide. Just on Friday, we were at Dodger Stadium, where there were about 4,000 people in attendance, and we were distributing formula, blankets, diapers, hygiene items, warm coats, and we also set up a toy shop for the children who were there, just to bring some smiles to their faces. But we are across LA County doing these distributions to make sure families have what they need. We know a lot of families are doubled or tripled up in hotel or motel rooms. Some are sleeping in their cars. So we're trying to just be all over the city and be there for people and be, listening to their requests. What do people need right now in this moment? They don't need furniture yet. They don't need they're not moving back into a permanent home. So what do they need at this immediate moment? And those are really these basic essentials that we provide.
Nora, I think people listening or watching right now, please go ahead.
I would just add that on top of that, we have orders from these partners going out all day long. Our trucks are driving around the city. And so by partnering with an evacuation shelter, a homeless shelter, a school, a resource center that we work with year round, they know where to reach the families. So that is our model, and it's the way that we're able to scale the most and be the most efficient during a disaster, is that we can find the families even in their temporary shelter during this period.
Hey, Kelly, how can people help? People who are listening or watching right now, I know you have the partnerships certainly with these companies, and also a lot of people I think are familiar based on the celebrities who are involved in the organization as well. But if somebody listening or watching right now wants to help, how can they do it?
They can donate, babytobaby.org. We have an LA Fire Relief Fund set up, and we also have corporations reaching out to us. We work with so many corporate partners, year round, who donate diapers and formula and palletize large donations to us, which are in our high need categories right now, which are diapers, formula, blankets, children's clothing, things like that. And then also we have volunteer sessions twice a day, every day at Baby to Baby at our headquarters here in Los Angeles, where we've had people coming in to pack up these kits for the children we serve, whether it's warm coats and blankets or bundling up the hygiene items and getting those ready so that we can do distributions and get them to our partners on the ground.
All right, well, we wish you good luck. And of course, that's Baby to Baby. That's the number 2 if you're looking for information, babytobaby.com. Kelly Sawyer Patrikoff, babytobaby.org, excuse me. Kelly Sawyer Patrikoff and Nora Weinstein, the co-CEOs of Baby to Baby, joining us. and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek. And I was looking at some of the stories that on the Bloomberg terminal that really piqued my interest, Carol. There's a nice real estate story from a couple days ago. Sarah
because it's in Colorado?
Yeah, it's actually just outside of Vail. It's in Beaver Creek. It's, Vail is the famous mountain. Beaver Creek is just a little bit to the west of Vail. It's steeper.
Sounds kind of nice.
It's really, they do the Birds of Prey World Championships there.
Okay.
It's really nice. Sort of looked at as like
really
a very
inexpensive.
It's sort of looked at like a very upscale version. It's like they give you cookies. I don't know if they still do this, but when I was living there, they give you cookies when you show up. It's kind of nuts. Yeah, you show up to ski and they have like people standing there with trays of warm cookies. Yeah.
Is this like flying first class and getting the hot fudge sundae and the warm cookie?
Yeah, it's pretty nice.
Okay.
I'm sure it's even nicer now than it was when I lived in that area.
Listen, if you're looking for an extra property, apparently there's one here for you, Tim.
Okay, it started out at $4.32 million. That was back in 1991. Now,
not too bad, right?
The house is very different. It's been added on to, and it's for sale for $25 million. It's big, though. It's
over 20,000 square feet.
Yeah.
9 bedrooms, 13 baths. 13 baths.
Yeah.
An indoor pool and a sauna. But, of course, you got to have an indoor pool and a sauna, right? Because it gets cold outside, and this way you can use it in the winter.
I guess.
1.5 acres in a gated golf course community. So when you don't feel like skiing or like in the summer, just go play golf, right?
Yeah, Malik Hassan is the person who bought it. He's a neurologist, also former CEO of a healthcare company. He's added onto it quite a bit, changed the kitchen around to make it more of a chef's kitchen that's that's private, so you can have the chefs working there when you're partying.
Oh, but you don't want to see them.
And exactly, yeah.
So
and
putting up walls rather than what everybody's been doing is knocking down walls.
Exactly. Does a lot of entertaining, too. He's a large donor to Republican politicians, so his friends in politics like Newt Gingrich and Grover Norquist have often attended the soirees that he's hosted there. There's like this ballroom, clouds on the ceiling. It's not a home for everybody.
He loved the views the property offered and recalls watching the world outside from the sanctuary of the sofa over the years.
Just people skiing by, skiing by, skiing by.
Honey, there goes another one.
Yeah, I mean, ski in, ski out. That's pretty great.
It's really kind of fascinating. I love it when people say this, when they've got a piece of property that's over 20,000 square feet, and they say they're selling the property because, he and his wife no longer need the space.
Well, they
just don't need it.
I don't know if they're still skiing.
Downsizing a little bit.
Yeah, downsizing a little bit. They have this real estate portfolio that includes properties in Las Vegas, Huntington Beach, also in Pueblo, Colorado.
It's in a trust for his kids. Did you see this?
Yeah, yeah.
Oh, okay. And that they've all made the decision to reduce the property portfolio.
Yeah. He's 87.
Okay.
He said they don't need 20,000 square feet of space. It's getting difficult for him to really enjoy it.
I get it.
They live full-time in Denver now.
I mean, to have to clean it, all those bathrooms, man, that's annoying.
Yeah, but I think you maybe hire someone to do the cleaning of the bathrooms.
No, you don't think they do it themselves?
No, I do the
You have a little brush, that little plastic brush?
Oh, I know it well. Yeah, I do.
In every bathroom.
Yeah, I know it. I know what you're talking about.
Oh, my God. The house was designed, did you say, by modernist architect Charles Sink, known for McNichols Sports Arena in Denver and the clock tower in the village of Vail.
The original owner, who commissioned the design back in 1985, was the Mexican businessman Sergio Bolaños, who didn't get to enjoy the house for long because he was arrested in 1989 on corruption charges by the Mexican government.
Check this out. He was afraid of someone shooting at him, so the windows were bulletproof, the current owner says. After his purchase went through in 1991, Hassan wanted to put his own stamp on the property, call himself very aesthetically driven.
Okay, so they added 5,000 square feet to the property.
That's a big, that's a big add-on.
Anyway, Sarah Rappaport wrote this story. You can check this out on the Bloomberg terminal.
It's a little ornate.
I would take it.
Great wood floors.
I would take it.
Yeah, not too shabby, right?
Yeah.
But that's kind of a nice little return. I don't know. I wonder what the add-on cost. That's a big addition.
Yeah, and I was shocked to see it was still over $4 million back in the 90s.
Yeah, that's pretty pricey.
I think that's really
30
pricey.
years ago, I guess.
Yeah.
I don't know. I mean, it was. I don't know. Was it not as big as a place to ski?
It wasn't. I mean, I think the mountains of Colorado have changed a lot in a very short period of time.
Yeah.
But this area is very exclusive because it's gated, it's ski in, ski out, you're right on the slopes, and there's not much around you.
All right. Well, if you're interested in property, you might want to check it out over the weekend. Hey, listen, I just want to go back, if I may, for a moment to the markets, because the S&P 500 notching its best start to a presidential term since Ronald Reagan was sworn into power back in 1995. So 1985. Even though we saw a bit of a rout in chip makers today, wait on the trade, S&P still up 1.7% this week. And I guess I wanted to point that out because our weekend broadcast, which you can catch on Bloomberg Radio at 8 a.m. Wall Street time, also on our podcast feed, we had a bunch of conversations that kind of looked into different policies or policies that may be out of Donald Trump and his administration and what it might mean. So a lot of analysis.
Check out that. It's on our podcast feed and available at Bloomberg.com, wherever you get your podcasts, and also, of course, on the radio tomorrow.
We do want to thank our team because... Hard to believe, but we don't do it alone. We have a lot of people.
All the successes are theirs and the mistakes are ours.
Yeah, so true, so true. Anthony Mancini, Colin Tipton, Steve Lanzone, Meredith Frank, Sarah Livesey, Justin Milliner, Cece Cherendoff, Sebastian Escobar, Elizabeth Sedrin, and the one and only Paul Brennan. Thank you, guys.
I think Paul's going to watch some football this weekend. I heard there are a couple big games. Couple big games happening this weekend.
What was that quote? Hell yeah, unquote.
Yeah, I think that's what he said.
He's going to be watching.
You Eagles fan, Paul? He's not. He said hell no about the Eagles. Okay.
Yeah, please know your audience. Know your audience, Tim Stenevec. All right, that's going to do it for Tim and me. Have a good and safe weekend. Hopefully, it gets a little bit warmer. Stay safe, everyone. Balance of Power starts right now.